All right. Hello, everybody. Welcome back to another episode of, well, it was kind of the market close, but now it's just Grab earnings. We thought Grab earnings would be at 4 p.m., ended up being at 5:15 p.m. We actually thought it would be at 6:30 p.m., which is why I scheduled the stream for 6:25. Ended up coming out at like 5:58. So it's kind of been all over the place, but we are live. We got a lot to discuss. We have the earnings call at 7 p.m., so in about 40 minutes. So I want to go through the numbers and kind of discuss what we got, what we're looking at here, and what's going on with this quarter. So first of all, the stock is down currently right now, and I think it's actually reasonable for the stock to be down about 8% right here. It's been hovering between 473 at the lows, got back to $5, closed at 534 on the day. And now right here, as you can see, it's at 486. I think management's commentary on the call is actually going to be really important to see what direction the analysts go with in terms of either their price target upgrades or downgrades. But I think down 8 to 9% is actually fair given the guidance we got for 2025. And that guidance is good. It's not great. I personally think they are sandbagging the guidance pretty aggressively, which if you look at some of the other numbers and how they get to their adjusted EBITDA growth, which is lower than what the street expected. The street wanted basically 500 million. They're guiding for about 470. But when you look at the revenue growth is way higher than what the street expected. So in my opinion, I think they're just kind of lowering expectations for adjusted EBITDA growth, and eventually they'll beat and raise, just like they did last quarter. They guided for 180 million. They came in at 313 million. And I think that's kind of the playbook that they're playing right here. But ultimately, we're going to see how that plays out in 2025. One thing I will say is, look, and I've tried to be as transparent as possible about this. If you think this is the next Palantir, Robinhood, Rocket Lab, and you're expecting 6 to 60 or 5 to 50, I feel like I've been pretty transparent in saying that's not what you're going to get here. This is a slow mover. This is a long-term bet. In my opinion, I think it can get to $10 by 2027. I don't think it's going to get there that easily. It's going to take time. So I think if you hate these the stock price movement, get out the stock and kind of just leave. Right? This is not going to be a Palantir, Rocket Lab, Robinhood move. But if you do want to go long Southeast Asia and you want to invest in what I think is becoming a juggernaut in Southeast Asia, then I do think Grab had an exceptional quarter outside of the stock price, which is currently down about 9% right here. So let's go through the numbers and see what we got. So first of all, let me go through the highlights I just posted on Twitter right here. This is why I really enjoyed this quarter. 764 million in revenue. That's up 17% year over year. That beat expectations. Adjusted EBITDA is 97 million. That's the all-time high for Grab. They're guiding for 50% growth in 2025. Now the street wanted 65% growth. I am very confident we're going to get 65% growth. I just think they can't say it right now because then they have no room to kind of move up from there. So I think we will get that. It'll probably just take some time, but that is why I think the stock is down about 9%. They were GAAP profitable again, 2 quarters in a row. They got GAAP profitable. So excited about that. The fact that they were able to maintain GAAP profitability. I mean, again, stock prices tend to follow free cash flow, earnings, and EBITDA growth. And at the end of the day, the fact that this is the first time in a row Grab ever had 2 quarters of sequential profitability. They had GAAP profitability back in Q4 2023. Then they gave it up for 3 quarters. Then they got it back in Q3 2024. Now Q4 2024, we got another profitable quarter. Hopefully 2025, we can have a full year of profitability. Positive adjusted free cash flow of 134 million. Grab now has adjusted free cash flow that is positive, which is good. They're guiding for 3.4 billion of revenue in 2025. That is way ahead of street expectations at 22% year-over-year growth, which is why I don't believe their EBITDA guidance, because you can't have that strong revenue growth and that less of a adjusted EBITDA margin, given that their margins were even better in 2024. And if the business is getting better, then I would imagine that gets better as well. So we'll talk more about that, but that's why I kind of think they're sandbagging EBITDA guidance for 2025. Financial services was up 38% year over year. That's the fastest part of the business. And their loan portfolio growth was up 64%. They bought back 10 million shares. They did not announce a $1 billion share buyback. I thought it could be a wild card where they announce a $1 billion share buyback. That has not happened yet, but they did buy back 10 million shares, and their monthly active users, 43.9 million. Last quarter, it was 41.2 million. So another 2 million quarter over quarter, 17% year over year, which again goes back to my thesis that Grab is becoming a juggernaut in Southeast Asia. And as a result, they are getting and continue to get this momentum. Anthony Tan says, 4th quarter was our strongest quarter ever. We finished 2024 with on-demand GMV growth accelerating to 20% year over year as we continue to generate profitability at scale. We have more users on our platform than ever, and our unique platform advantages places us in a strong position to continue this growth momentum into 2025 and to deepen our user engagement across our system. And that's kind of the highlights that we got in the context of this growth. So let me go to the actual numbers in and of itself, and then we'll keep going from there. That was the top line numbers on Twitter. Let me get to the actual press release. So here's what we got on the actual press release. We're going to go through a bunch of this stuff and then keep going from there. The call is going to be in about 30 minutes. Okay, so Peter Oye, the chief financial officer, said, we outperformed our revenue guidance for 2024 while demonstrating our ability to scale the platform profitably and delivered a record year of group adjusted EBITDA of $313 million. These are important milestones for us as we look to maintain our growth momentum and cash generation capabilities while remaining disciplined in making strategic investments to strengthen our ecosystem and enhance shareholder value. So let's take a look at some of these metrics. GMV. That is up 20% year over year. That's something you want to see in the broader context of mobility and deliveries. Monthly transacting users, that is up 17% year over year, 37 to 44. Partner incentives did go up, and I think this is another reason that the street is giving them a little bit of a haircut right here, because partner incentives are essentially the amount of money they have to pay to get people to use the product, and that needs to come down a bit more for their EBITDA margins to go up. The fact that that's not going down yet just means that they're not at that stage of the business where they have the operating leverage to get that to go down. So I can understand why the street takes them down on that concern as well. Consumer incentives are up 37% year over year, and then loan platform is up 64% year over year, which is the fastest part of their business when it comes to financial services as well. Okay, cool. So let's look at some of these stats. Revenue growth above 17% year over year. On-demand GMV was up 20% year over year. Total incentives were $512 million. On-demand incentives were 10% of GMV. That's compared to 9.4%. So that did go up year over year. And that's another reason why the stock's probably down right here. Operating profit in the fourth quarter was $2 million. Net income was $11 million. Adjusted EBITDA was $97 million. Again, that is an all-time high for Grab. Regional corporate cost was $87 million compared to $100 million. So that is down 15% year over year, showing they have a bit more commitment to that fiscal responsibility and getting some of those those external costs to come down. Cash liquidity totaled $6.1 billion. So this is something I was surprised by a little bit. I thought they would increase their cash liquidity, and the reason their cash liquidity is not that high is probably for two reasons. Number one, they only increased deposits by $100 million. So their deposits went from $1.1 billion to $1.2 billion, whereas last quarter they went up by $500 million. So the lack of increase in deposits, the reason for that is probably because they didn't give as much of an APY to people that signed up for their financial services product. That's probably why their cash liquidity is down. And also they bought a couple companies. They bought NAM24 in Cambodia. I don't know how much that cost, but that probably took away a little bit of the cash as well. They bought back 10 million shares. So now I think they have about 300 or about 250 million left in terms of their share repurchase plan of the 500 million that they issued a couple quarters ago. And then net cash from operating activities was about 253 million. Adjusted free cash flow was positive at 61 million, and for the full year at 134 million. Mobility, on-demand GMV, 18.3 billion. That is up 16% year over year. That is the total amount of money that actually went through their system when it came to people that called on Grab for a ride or for ride hailing. Financial measures, again, that was up 19% year over year. So about 2.7 billion for the full year when it came to on-demand GMV. Now here's their guidance. Their guidance is at the high of what the street was expecting, 3.3 to 3.4 billion, 19 to 22% growth. I think the street was expecting about 17% growth. So 3.4 billion, not too bad. And I think they're probably going to exceed that, given they exceeded that back in 2023 as well. And then, or 2024. And then adjusted EBITDA, this is the number for why I think the stock is down. The street wanted this to be closer to 500 million. It's at 470. So I can understand the street being upset that that number is not as high as they want it to be. Granted, I do think that number will increase, and I think that's a sandbag. But in the short term, the stock definitely will take a hit if that number continues to go down. So that's what we're seeing in the context of the overall metrics. Now, let me go to the presentation in and of itself. We're going to have the call in about 30 minutes, and you can see a little bit more of a visual perspective on what's happening with Grab. Again, look, for those that are upset that it's down 9 or 10%, it is what it is, but I kind of don't care. Like, at the end of the day, my price target was $10 2027. If you expected $10 tomorrow, this is the harsh reality of the markets. That's probably not going to happen, right? Like, it is what it is. And I hopefully made myself pretty honest about the fact that I don't think this is, I mean, even today on Twitter, so many people are saying, well, do you think it's going to break out? I'm like, look, my price target is 10 by 2027. There's 4 billion shares outstanding. They need to have EBITDA growth. They need to have cash on hand. It's not going to be easy to get that tomorrow. I think markets have spoiled us a little bit by assuming that stocks can just go up. That's not the case for Grab. And if you hate that, you get out the stock. But if you like these numbers, then this is one of those things where I think the story is only getting better and better, and eventually the stock price will catch up to the story. So revenue 17% year over year, on demand gross merchandise and volume, that's up 20%, group adjusted EBITDA at 97 million, and then adjusted free cash flow at 61 million. So financial and operational highlights. 26% penetration of Saver transport rides across the region in Q4. The proportion of new MTUs who joined the Grab platform through Saver transport rides was 14%. And there's a 1.5x higher average transaction frequency with Saver transport users versus non-Saver transport users, which is just showing deeper penetration in terms of the stickiness of their platform. The loan book and the bank deposits, 2.2 billion of loans were dispersed throughout the year, 20% or 20 basis point year-over-year reduction in the net cost of funds, which is good for them, and 64% year-over-year growth in loan platform. One of the reasons I really love Grab is because I think their financial services part of their business is exciting. And because it's exciting, I do think that that is the underlooked part of the business that eventually will take it higher over the next couple of years and get to where I'm looking for, which is $10 by 2027. But that part of the business is a part that I think gets underlooked. 1.2 billion in total deposits across both of their banks. 9 in 10 GX Bank customers are users on the Grab platform, kind of showing the synchronicities between Grab users and the fintech part of the business. And over 200% of the year-over-year growth in loans were dispersed by GXS Bank. Okay, so deliveries, again, revenue, 407 million. That's up 13% year over year. Gross merchandise volume, 3.2 billion. That's up 19% year over year. And then segment adjusted EBITDA, that's only up 1% year over year. The reason it's only up 1% is because their margins are not the best. Those margins do need to get better for adjusted EBITDA to go up, but it is trending in the right direction. Mobility, 282 million versus 237 million. That's up 19% year over year. GMV is up 23% year over year. That is an indicator of how much revenue they're going to be able to get. 1.8 billion versus 1.4, and then segment adjusted EBITDA 153 million versus 128. That is also up 19% year over year. Now we got financial services. So the revenue is up 38% year over year. Again, I think that's going to be a business that grows pretty rapidly in 2025, and if they can keep up that revenue growth, that's where they get to the high end of their revenue guidance, if not surpassing that. 74 million versus 54 million last year. Loan platform, 536 versus 326. That's up 60% year over year. And then segment adjusted EBITDA, that is up 22 million year over year. It is still negative at negative 27 million. I think hopefully in the next couple of quarters that becomes positive. And if that becomes positive, then we should see greater results in the financial services part of the business. Okay, so consumer incentives. This stuff is really important. So for deliveries, they spent about 363 million. That is up from 285 million. Mobility, they spent 145 million. That's up from 108 million last year. And then financial services, they spent 4 million. That's up from 3.1 million. Total incentives were 512 million. Last year, they were 397. This is another thing they're going to have to figure out. And part of the reason that Grab wants to buy GoTo, which is a company in Indonesia that is their biggest competitor when it comes to ride hailing, is because when you're competing with all of these companies for rides and deliveries, your margins take a hit and you have to incentivize people. Which means in this case, spend about $500 million to get them to use the product. And that's just annoying, right? So I think part of the reason they didn't issue a $1 or $2 billion share buyback is because they need the cash liquidity to eventually buy out some of these larger competitors. And I know GoTo denied that they are in talks with Grab, but I think they probably are in talks with Grab. And if that's the case, then that could really change the business as well, because you take out one of your biggest competitors and you get your margins to go up. But until then, those incentives are still high, which is probably the reason the street is also upset at this. Revenue, 3.4 billion year over year. Again, 19 to 22% year over year growth. And then adjusted EBITDA 440 to 470. I think they're sandbagging that. But if you sandbag in the outlook for 2025, the street has no choice but to accept what you're saying. And if that's the case, they'll probably take it down if it gets hit. So there we go. Grab right here. Where's the stock? Are we getting hit? I think we are getting hit. There you go. 11% down, 4.75. Yeah, I mean, look, at the end of the day, I think these are phenomenal numbers. I think the guidance is a little light, and that's why the street's upset. But I think the institutions know why they're buying the stock. There's a reason we've seen the rise from about 50% to 76%. This is just one of those things where it is going to be a slow mover. It is not going to be a Palantir, not going to be a Robinhood. It doesn't have the narrative to become one of those companies, just in terms of like how the share price would react from, I don't know, more trading volumes on Robinhood or more crypto as the catalyst, or for Palantir, more AI spend. We'll talk more about Palantir in a second because I know that stock is getting hit as well. But I think that's why we're seeing the stock get hit about 11% right here. All right, there you go. That's what we got on earnings, and that's why it is down right here. 11%. Will I be adding on this? Yeah, dude, look, I was adding at 470 in January, so I'll probably be adding on this. This is not a quarter where I am upset or a quarter where I think it's bad. Is the stock not going up in the direction I want? Yeah, of course. But like, it's been a good year across a lot of different stocks that I own, like Hood and Palantir. And it's one of those things, bro, where I think everyone needs to also have a little bit of just patience here. Like, let's talk about Palantir, because I know people are probably curious about that. Palantir right now is down another 4% after hours. I think at one point we got to 105. Now we're at 108. It was down 10% during the day. The reason we're down is because a article about Karp selling $1.2 billion of stock is kind of going viral in the business media sector, which was released from the 10K. So that is accurate that he will be selling $1 billion of stock. He was actually supposed to sell $6 billion if you read the 10K. So he scrapped out the other $5 billion. So it's actually a lot less than what he was supposed to sell. But that's going viral. And then you've also got the Trump news of cutting defense spending in the Pentagon by 8% over the next 5 years, which is being perceived as bad for Palantir. Now, is this an issue in the short term? Yeah. And like the street's probably like reacting to it the way we're seeing it right now. And that's why the stock is down almost 15% for Palantir. Is it a big deal? No, like it's just not. It's just like stock's up 45% year to date. I just can't be upset about that. And I think I was talking about this with a couple of people today. I think we are getting a bit spoiled where we had such a good 2024 and 2025 so far has been relatively good across a lot of different sectors that people are just expecting things to keep going up. And that might not happen, right? Like it is what it is. It might just not go up. It might take a breather. It might relax a little bit. If Karp's selling $1 billion of stock, I don't really care that Karp's selling $1 billion of stock. I mean, I've never cared about insider selling, but yeah, that'll piss off some people. That'll get the street probably to be a little upset. And then there you go. You're probably going to get some volatility on the downside. Here was my take on what happened with Palantir. Again, I said they're up 45% year to date. It's not that big of a deal. I don't know how the Pentagon budget uniquely affects Palantir. I'm going to have to do some more research about how much money they actually get from the Pentagon, but I think this is bullish for Palantir because if the Pentagon's going to be more congruent and efficient with their spend, a lot of that money theoretically should be going to the right software providers. And given the relationship between Palantir and Doge, I would imagine Palantir gets some of that money. And then again, the 10K disclosed that Karp can sell about $1.2 billion of stock. I don't think that's a reason to sell the stock, but other people might interpret it as that because I don't think insider selling has ever been a reason to sell the stock. And you compound those headlines against each other, you're going to get a decline like we're seeing right now. My thing is just, I really don't think you can be upset. If you've been in the name for a while, given the 1 year performance up 400%, it's understandable that people are nervous in the velocity of the sell-off towards the end of the day, but it's not understandable if people are actually mad at Palantir going down. If we fall another 10% and we go to $85 and we go back to where we were before earnings, would it suck? Yeah. Is that the worst thing in the world? No. Like, it's just not. And I think a lot of people are getting really greedy on these gains, and that's usually when shit hits the fan. In terms of just way too much froth being in the market. And so I do think, yeah, people are overreacting. And the downstream effects is that people are then expecting every stock to just go to the moon, like a Palantir, like a Hood, like a HIMS, and that's not going to happen. Especially with companies that need to take their time to grow into the growth. Grab right here down about 9.18%. It's going to take time. And I think that is okay for it to take that time. Remember, we dropped from 84 to 65 not too long ago. Yeah, dude. And look, I know I mess with Steve back and forth when we get into our conversations about Palantir. The one thing he's right about is that people's expectations are a bit insane. And like, I think the main debate between Steve and I has been like momentum versus valuation. And quite frankly, I've agreed with him. Like, yeah, the valuation is up there, but momentum means it doesn't have to come down. One thing he's been right about is people are way too excited about the stock continuing to go up and up and up. When in reality, that doesn't always happen. Or it's hard for it to constantly always happen, right? That is not Steve. That is someone else that was calling me. I will talk to her later. So don't. She's probably calling me like, why is Grab down? It's not my sister before anyone says that. It's not my freaking sister or my mom. I have other people in my life that are not my mom and my sister that are also women. So it's Lydia, bro. It's Lydia. It's Lydia. She's probably like, why the fuck did you make me buy Grab, dude? You know what was funny, bro? You know what was really funny on actually, no, I'm not even gonna say it. Never mind. Let me just not say it. Never mind. We'll move on from that. Anyway, so yeah, again, I think people are getting a bit too greedy, and it is what it is. It is what it is. If people are getting a bit too greedy, then they're going to have bad expectations, and that's the easiest way to get burned. After 2 really good years in the market, I'm not going to complain if Robinhood goes back to 45. I'm not going to complain if Palantir goes back to 75. Like, I quite frankly don't care. Like, I really don't. I mean, like, I'm humble enough to realize that markets don't just go up in a straight line forever, and that although 2024 was amazing, it is okay for stocks to take a breather and consolidate and grow into their valuations. Same thing with Grab. Why is Grab down 10%? It's not because everyone's upset at Grab. It's because their adjusted EBITDA growth isn't as strong as the street expected. That's okay. If you're a long-term investor in Grab, you believe, or at least I believe in the next couple of years, that adjusted EBITDA growth will be stronger than expected. They will be able to get to the levels that I think they can get to, but it's not happening on February 19th. Okay. It is what it is. And that's just something I think everyone has to accept as well. It's not okay. It's normal. There is a difference. 100,000%. It is normal, dude. It is so normal to see stocks take a breather. And maybe this is a little bit of a nice little gut check for everybody to remember. Yeah, stocks do take a bit of a break. Now, SMCI, I don't know why SMCI collapsed today. It went down from up 15% to up 8%. It's down 3% after hours. This one, I actually don't know why this one took a hit. But yeah, it did. It did take it. How do you think Grab earnings was overall? I thought it was phenomenal. As soon as I saw the number, I saw the stock tank, but the first thing I saw was net income. And I was really happy about that because there was a little bit of fear that they wouldn't get the GAAP net income again in terms of being profitable. And they did 2 quarters in a row. The only number that I don't like here, there's 2 numbers. Number 1 is adjusted EBITDA guidance, which I really think they're sandbagging that because they have to. That's just how you play the game of Wall Street. They sandbagged all throughout 2024. So my understanding is if they keep cutting costs, they will sandbag that in 2025. And then number 2 is the deposits only grew 100 million quarter over quarter, whereas last quarter they grew 500 million. But that's not really a bear case on the overall thesis. I mean, the broader market, I think, is just not impressed with the growth, but that doesn't mean the growth isn't bad. This is literally a SoFi. Yeah, I mean, quite frankly, this is kind of a SoFi. It pretty much beat on every metric except adjusted EBITDA, and it's going down 10%. I don't know. I mean, this is one of those things that definitely we've seen happen in the market before, but I don't think it is exclusive to Grab or a reason why Grab uniquely doesn't deserve to get this momentum. Also partner. So yeah, I mean, that's another thing. Now, granted, I knew that was going to go up. It went up a bit more than expected, but that's something they're eventually going to have to control over time. Now, the call tends to be really good. I listened to their call about 4 or 5 times for Q3 2024. First of all, I really like these guys. I really do think they have a good head on their shoulders. You can trust them. You understand kind of how they're making their analysis. They're able to answer questions in a pretty productive way. And we're going to see on the call kind of how they guide and what they're thinking about the top line growth. But I do think that this is a management team that understands how to take this in the right direction. But again, it's one of those things that when your margins are this low for this type of a company, this is not 80% gross margins like Palantir. This is a company that's going to take time to put up that earnings growth. And if you're expecting it to happen tomorrow, it's probably not going to happen. Here's a couple things Anthony Tan said in the press release. Building upon the strong foundations we've laid in 2024 to scale our platform, we see plenty of headroom to further outserve the millions of users and partners across Southeast Asia in 2025. We will continue evolving our product strategy to harness the power of our ecosystem to enhance the relevance of our offerings to a wider group of users and invest in initiatives to improve our user lifetime values. For our existing users, there is an untapped opportunity to drive higher cross-sell rates to adjacent verticals, such as groceries, dine-out deals, and digital banks. This also applies to driving adoption for more nascent initiatives such as group orders and family accounts. In tandem with broadening our targetable user base through product innovation, we focus on improving retention and engagement of our core user base. Grab Unlimited, the largest paid loyalty program in Southeast Asia, reached an all-time high subscriber base, and today drives about 35% of deliveries GMV, showing that the stickiness of their platform is pretty strong. In certain markets such as Singapore, Grab Unlimited already drives almost 50% of our deliveries GMV. Another area we are focusing our efforts on is generative AI to improve the health of our marketplace. Grab Ride Guide, an AI tool which guides our driver partners to demand hotspots, are in merchant menu assistant and prime examples of AI investments that have enabled us to enhance earning opportunities for our ecosystem partners. This is actually a really cool thing. Merchant menu assistant is basically Grab scanning your entire website's restaurant. Or your restaurant's website, and then automatically making an AI-generated menu. These are things that traditionally take small business owners way too much time, or they never end up doing it. But if they can give more menus to people on the product, more people can order food on the product, which leads to more deliveries for their merchants. And that's all being done because of AI. So it's not an AI name by any sense of the imagination, but it is something that's using AI in a much more efficient way. Additionally, to improve internal operation efficiencies, we have been driving greater adoption of generative AI across our organization. Today, over 60% of our engineers actively use an AI code assistant to improve their productivity. Autonomous vehicles. Okay, so they're addressing it right here. While it is still early days in the region, we are in proactive discussion with regulators and potential partners to embrace this new technology for our users. So kind of front running the AV argument. Having spent the past decade of building the strongest on-demand network across the region, we have driven best-in-class fleet utilization rates, which has in turn enabled us to capture growing demand in mobility and command regional category leadership. We believe that our strong demand generation capabilities will be key to successful adoption and sustainability of AV in the region. We see them as complementary, kind of same thing that Uber said, to our existing fleet, especially in areas where there are service gaps. We also will continue across the region to provide upscaling opportunities and enhance the earnings potential in the coming years in line with our social mission. Cool. So I didn't think they would address AV, but I guess they do think that AV is something that investors potentially are concerned about. The call will be in about 10 minutes. And we'll see what they have to say. I think it will be more designed to avoid traffic jams, improving traffic flows. Yeah, and also I think in Singapore, autonomous vehicles make sense. In Vietnam, it doesn't as much. So I think there's going to be sort of a bifurcation of where they deploy autonomous vehicle technology, if it's even ready to get scaled in 2024 or 2025. But there are certain parts of Southeast Asia that I just think is going to be very hard to imagine actually happens. But in other parts, it is they have a much better chance to make it a thing. Okay, what else do we have right here? So let me look at some of the other markets or the other stocks in the overnight markets. We also had Trump give a speech in a second, so we can look at that. Vimeo's down 12%, Palantir still down 3.5%, Tesla down 0.11%, Hims is down 1%, S&P is actually still at all-time high. Celsius up a little bit after hours, SMCI still down 2%. Rocket Lab took a nasty hit as well. I sold some puts on Rocket Lab at 28. If I had waited a little bit, would have captured a bit more premium. 25.93 on Rocket Lab. So kind of across the market, we were talking about this with Sam on the market close. We're getting a little bit more risk off in certain areas. Bitcoin right here, basically flat on the day, but MicroStrategy was down. And I don't think that's the worst thing in the world to get some risk off, given how risk on we were over the past 2 months, essentially. In the Philippines, Grab is big, but it's not ready for autonomous. Yeah, I agree. Like, there are just certain parts of Southeast Asia where it's just not going to be as easy to get there. Okay, Palantir. So let me ask a question to everyone here. What are your guys' raw thoughts on Palantir and this price action we're seeing? I'm curious if people are actually scared, if they're upset, if this is literally a nothing burger. I mean, I was surprised by the amount of people that were actually like scared by seeing this 10% decline. To me, that really proved, okay, people legit think that this thing is just going to go up forever. And it could, but it also couldn't. And I think, like, to be a little bit more of just a sophisticated retail investor, it's okay to know that after being up 55% year to date, trading at almost $300 billion in market cap, if you fall 10% on a headline that probably is not even that relevant to Palantir, in my opinion, in regards to the Pentagon, maybe it is, maybe it's not. But even if that headline is what creates some jitters, that is okay. Like, that stuff happens. It happens all the time across. I mean, we just saw that with NVIDIA, with DeepSeek, right? Now, granted, that was a pretty good buyable dip, and we'll find out if Palantir's buyable dip, but nonetheless, that did also happen just now with NVIDIA. Temp Fate says, I grew up in the Philippines, and there is no way in hell you can automate driving here. I don't care how advanced FSD becomes. Yeah, people are saying, Tesla's getting ready to sell products in India or sell cars in India. I just went to India in October. I don't think FSD is happening in India, but if they solve that, Tesla's going to be the most valuable company in the world. But I don't know if they can solve that. All right, I'm seeing comments in the chat. It's fine. People like to overreact. That's fair. Nothing burger. I was waiting for the drop, hoping for it. Hopefully it drops more so I can comfortably add. That's the other thing. A lot of people are also just waiting for a dip buying opportunity. So if it does drop, I don't think that's the craziest thing in the world. Market overreaction. I think it's an overreaction on the headline, but I also know Palantir's trading at extended multiples. And so it might not be an overreaction, just given the stock is trading so aggressively and the market was looking for any reason to take it down. And if the Pentagon is the reason, then the Pentagon's the reason. But I still don't think we can deny that that the stock right here is up 45% year to date. Make the small bell great again. Oh my gosh. We got to bring the small bell back. I think we fill the 85 gap. Well, I'll have Jason on tomorrow. I'll try to do a segment with him. Jason called me right before I went live on the close, and he was like, dude, this is the first time we really got a dip in all of 2025. And I was like, yeah, and he's thinking like, is this an ad? Is this a wait? Like, do you sell this further into weakness, or do you buy this into weakness? So I think everyone right now is trying to figure out exactly what type of an opportunity it is. My point is just whether you buy or sell, it's up 45% year to date. Even if it goes back another 20%, it'll be up 25% year to date. Like every stock doesn't go up 400% per year like we saw for Palantir in 2024, and that's not the worst thing. I mean, that's just not something people can get obsessed about. Mike says regarding Palantir, I was getting a little tired of winning. Freda says my average cost is 12.75, so I'm good. Well, that's the other beautiful thing of being in this very early. Rick says, raw thoughts, Palantir is too reliant on government, needs more growth outside of government. So it's interesting because I think their U.S. commercial growth is definitely a hedge against their reliability in the government. I agree with you. They need more international growth. My thing is just, what is the relationship between the Pentagon spend and Palantir? And I'm going to try to do some deep diving on that and like trying to figure out, like, do they really benefit a ton from Pentagon spending? I'm sure they benefit a bit, but is it like so massive that it deserves to be down 10% if the budget gets cut? Arnie's take on this right here, he responded to my post, was the Pentagon is essentially proving that Trump is aligned with Sham's ideas, Sham Sankar. How do you stay competitive while having a lower budget? Technology, aka Palantir. And I just 1000% agree with this. Sham Sankar has literally been saying we need to cut the wasteful spending and the monopsony that is the DoD and start spending on shit that works. And to be honest, what Trump said today in terms of cutting budget, I didn't have a problem with that. That's actually very consistent with the broader thesis around becoming more efficient and everything that Doge has been kind of advocating for. The question is, will Palantir be a winner in that efficiency? And I mean, I think they will more than they won't. David, thank you for the $14 super chat. Hey, Amit, any thoughts on the innovative, disrupting, evolving HIMSS? To me, they are like the Netflix of healthcare. Yeah, look, HIMSS is great. I'm happy for those that are making money on this. But again, this is another thing that's scaring me. It's like people are seeing HIMSS go up 150% and they think Grab needs to go up 150%. It's like, it's a different business. It's a different market. It's a different valuation. It's a different growth. Like, it's just, a lot of these things can't be universally applied. So look, I'm not getting into HIMSS because I feel like I missed it. And if I didn't miss it and it goes to 100, I kind of don't have any regrets. For those that are in the name, I don't think there's necessarily a reason to sell given how much growth they're putting up and the fact that it's still only a $15 billion market cap, growing 80% year over year. I get it. But I just hope the universality of seeing HIMSS explode is not something people apply to every name. Because like that's just not a healthy market to see this playing out. Okay, we have the Grab call in about 6 minutes. We have Trump talking live. Let's see if he's saying anything here. He's at the conference in Miami hosted by the Saudis. And in 5 minutes, we will start the Grab call.
When you think about it, I think we could get it down 50 or 55, maybe even 60.
That echo is too bad. You guys heard that? This further. Okay, let's see what I got here.
Crypto and Miami seems to be the center of the action, come to think of it. And maybe it'll stay there. Business optimism skyrocketed 42 points. Think of that in a single month, the most in history by far. That's the biggest increase in history by not even close. The ISM index of manufacturing activity surged into positive territory for the first time in many years. Amazing. And it was just announced, this is an interesting one. I didn't realize it was that bad for so long, but it was just announced by one of the nation's most historically accurate and respected pollsters, Rasmussen, that the number of Americans who believe our country is on the right track now exceeds those who think it's heading in the wrong direction for the first time in 20 years. Can you believe that? 20 years.
Okay, so I don't think we're getting anything from that Trump conference. I'll try to get clips of it later and we'll see if... Oh, Elon's there. Oh, look at that. I just fast forwarded. Elon's there. Dude, Elon and Trump, bro. They are two peas in a pod, huh? I mean, they are running this thing. Gene says, bro hasn't mentioned Bitcoin since being elected. That is a fair point, bro. I mean, I'm happy Bitcoin's holding 95, but like, Yeah, we haven't had too much of a strategic Bitcoin reserve or anything mentioned like that from Trump. Now, granted, David Sachs is doing his thing with crypto, but nothing too crazy since then. Also, this this post I saw as well. Ori, thanks for sending this. So someone knew, as someone always knows, that there's going to be market volatility. This person, who we don't know because they're anonymous, but they made a trade today. They bought 600 grand of Palantir puts for $120. So they entered in at $4, and those puts now are worth 13.6. They're probably worth closer to 14.5 after the after hours drop. That's about a 200% return. And in the morning, they bought those puts, and it seems like they knew that there was probably going to be maybe a bit of an announcement around the DoD or the Pentagon getting a budget cut. Maybe they knew this 1.2 billion sale was going to go viral in terms of the headline, because that news came out in the morning at 9:30, and Palantir was up. So like that news really went viral, I think, when the Barron's article kind of like made it go viral, and then people started talking about it. But there were people that profited off these puts here today. Hey, Amit, I just joined. Didn't grab beat earnings. Why did they dump? They did beat earnings. Guidance is a little low for 2025 on adjusted EBITDA. That's the reason I think they're down. There could be other reasons. That's honestly, I think that's the main reason. It's just the street wanted 500 million. They came in at 470, which again, to me, doesn't really warrant that big of a bear case, right? Like, look, if there was something bad in the numbers, I would say it. I mean, this is why I spent 20 minutes before I went live looking at the numbers. Outside of adjusted EBITDA going down, I don't. And again, I still think that's sandbag. I don't see, and I texted a couple people as well. I texted Sebastian. He's like, dude, these numbers are great. It's just those adjusted EBITDA guidance numbers were not as good as the street wanted. But I don't know if we see downgrades on Grab tomorrow. I think the analysts either hold their neutral rating or they upgrade because the numbers, in my opinion, outside of that one metric were really good. I don't think we get actual downgrades. I mean, to get a downgrade, given all the growth that they're showing for 2025, that would be a bit weird to me. So we'll see on this call kind of how the analysts think of it. And then we'll go from there. Oh yeah, Loop Capital. We have a new street target, guys, on Palantir. It's above Dan Ives' 125. It's 141. 141. And you know what they say in the thing? They said I'll read it after the grab call, but they basically said, hold your nose about valuation. Palantir is still a buy. So Loop Capital is basically like, yeah, we get it. The valuation is expensive, but we don't care. Palantir is unique enough. Kind of similar to UBS's upgrade when they wrote a price target at 80 that they upgraded to 105. But essentially, they just didn't care. VVV, thank you for the $100 super chat. Appreciate you, brother. Thank you for being in the chat, and thank you for the $100 super chat. I will be buying, what can I afford? 20 shares of Grab, 25 shares of Grab with that. Maybe tomorrow it goes to $4. We can get 25 shares of Grab. Thank you, VVV. Appreciate it for the $100 super chat. And thank you for being here and being part of the show. Yeah, 141, right, from Loop. 141. 141 is a street high target. And they essentially said, forget the valuation. We think that this thing is special enough to keep going higher. Did you get a chance to look into Ackman's new gig yesterday? I did not get a chance to look at that, but I think after the bell, or not after the bell, it's not the market close. After the call, I'll stay on and we'll try to see some of the other market news, because we didn't really get to have a real market close because the Grab earnings was the wrong time. So we'll talk about some of those headlines after the call. All right, we should be starting pretty soon. In about 30 seconds, and then we'll keep going from there. Palantir's at 107. Yeah, Palantir's still getting hit after hours. It hit 105 at one point. Bounced up. I don't know. What tomorrow's market open is going to be really interesting. Do people sell into this weakness, or do they buy the dip? And tomorrow we're going to see kind of how this ends up playing out. I bought at 107. Yeah, I know a bunch of you guys bought around that 109 to 110 range. I mean, look, given how badly the street reacted to this news, it's just a question of, like, do they really think this is an issue? And so far they do, but I think tomorrow is that's sort of a 3-day rule. We're going to see how bad this goes. All right, here we go. Grab earnings call 2024 for Q4. Oh, wait. Oh, we're starting. We're still waiting. All right, now we're starting. Here we go.
Ladies and gentlemen, thank you for joining us today. My name is Faith, and I will be your conference operator for this session. Welcome to Grab's fourth quarter and full year 2024 earnings results call. After the speaker's remarks, there will be a questions and answers session. I'll now turn it over to Douglas Yu to start the call.
Hi, good day, everyone, and welcome to Grab's fourth quarter and full year 2024 earnings call. I'm Douglas Yu, Director, Investor Relations and Strategic Finance at Grab, and joining me today are Anthony Tan, Chief Executive Officer, Alex Hungate, President and Chief Operating Officer, and Peter Oey, Chief Financial Officer. During this call, we will be making forward-looking statements about future events, including our future business and financial performance. These statements are based on our current beliefs and expectations. Actual results could differ materially due to a number of risks and uncertainties as described on this earnings call, in the earnings release, and in our Form 20-F and other filings with the SEC. We do not undertake any duty to update any forward-looking statements. We will also be discussing non-IFRS financial measures on this call. These measures supplement but do not replace IFRS financial measures. Please refer to the earnings materials for reconciliation of non-IFRS to IFRS financial measures. For more information, please refer to our earnings press release, remarks, and supplemental presentation available on our IR website. And with that, I will turn the call over to Anthony to deliver his opening remarks before we open it up for questions.
Thank you, Doug. Fourth quarter was our strongest quarter ever, closing out 2024 on a strong note as we relentlessly executed on our product and tech-led initiatives. This drove an acceleration in our on-demand GMV to 20% year-on-year. Product initiatives launched in 2024 targeted at improving the affordability and reliability of our on-demand services resulted in a new record of transacting users on Grab. Today, we have achieved strong product market fit with features such as Saver Rides and priority deliveries across all our markets. The strong top-line growth, coupled with ongoing cost discipline across our business units, has enabled us to continue scaling the platform in a profitable manner. We achieved our first full year of positive group adjusted EBITDA of $313 million, coming in at the upper end of our upgraded guidance, and positive full-year adjusted free cash flow of $136 million, which improved by $370 million year-on-year. Building upon these strong foundations we've laid in 2024 to scale our platform, we see plenty of headroom to further outserve the millions of users and partners across Southeast Asia this year. We will continue to evolve our product strategy to harness the power of our ecosystem. As a result, we expect to maintain our on-demand GMV growth momentum in 2025. And concurrently, we will take a balanced approach to drive a continued expansion of our adjusted EBITDA and adjusted free cash flow, while also being highly disciplined on our use of cash. With that, we now open the call for questions. Operator.
Ladies and gentlemen, we'll now start the questions and answers portion of the call. Please press star followed by 1 to ask a question, and we'll call on you for your question. When asking your questions, please limit to 2 questions per person. Thank you. Our first question comes from Pang Vitt from Goldman Sachs. Your line is open. Please ask your question.
Hi, good morning, and thank you very much for the opportunities. Congratulations as well for another great set of results. 2 questions from me. Firstly, just wanted to have a better understanding around your product mix shift. Saver is already a third of your deliveries and 26% of the mobility transactions. How should we expect the mix shift to transform over the years, and how will this impact your margins, especially in mobility, where we start to see your margins now dipping to 8.4%? That's question number 1. Question number 2 on fintech. We see that the loan book grew to $536 million. Revenue also grew nicely to $74 million. However, EBITDA losses were slightly higher on a quarter-on-quarter basis. Help us understand where you are spending more, and when will we see the inflection point towards profitability?
Okay, thanks, Pang, for the questions. This is Alex. Let me answer both of those. So first of all, on the dip in margins and deliveries this quarter, as you know, we don't operate the business on a short-term margin optimization basis, but we are trying to drive absolute EBITDA and free cash flow growth. So you will see these kinds of fluctuations in our segment margins from quarter to quarter, and then sometimes incentives go up, go down. In order to make sure that the marketplace health is in the best possible state and that we're really driving improvements for our consumers. What's key though is like on a full year basis, if you look back, deliveries margins did expand 70 basis points year on. And the mobility margins also remain stable. And obviously you've seen now this acceleration in growth, which is a big objective for us. As we look forward to 2025, now trying to address your question on mix, we will continue to grow this momentum, and you will see us focus equally on the high end of our price laddering as we are on the affordability end of the price laddering, to make sure that we keep that balanced approach to margin growth as well as overall GMV growth. And I could take this opportunity to reconfirm our commitment that the long-term steady state delivery margins will be 4% plus, in line with the prior guidance that we've given. And then the mobility margins 9% plus. So we're still very confident that that's where this business will end up. In terms of some of the growth drivers for our high value services to better serve that segment and to make sure that we keep the margins balanced, I think our partner strategy is very important for that. So we have supply partners like Bluebird in Indonesia, for example. We have grocery partners, examples of SM and Robinsons in the Philippines. Brand partners like Coke, where we've done the Coke and Go initiatives to drive benefits for consumers together. And then, of course, we've got a great set of partners for the banks in each of the three markets, Singtel, Quoc, and MTech, totally blue chip with a great customer basis for us to expand our ecosystems. Maybe I'll turn to your second question now, which was on the financial services loan book and the increase in costs as we grow. So firstly, just to recap for everyone on the call, we've got two different businesses within the financial services segment. We've got the digibank and we've got the GFin. So on the digibank lending first, the loan products were launched very recently in the fourth quarter. And so we're really growing those fast and scaling while within the credit risk appetite that we've set out. So we do expect the digibanks to continue to see increase in direct costs, with these new launches. Firstly, the Flexi loans in Malaysia is just launching for the first time for consumers, and then the MSME products for small businesses also just launching in Malaysia and Singapore. So we're supporting those launches currently, and that obviously brings some increase in direct expenses. But probably more significantly, as you understand, with the loan growth at this rate, for example, GXS in Singapore doubled their loans year on year. We do need to build up balance sheet provisions. So we're running these ECLs through the expense lines of the P&L as we grow. And obviously, as the credit models develop, etc., it's good to have a strong balance sheet. But as those credit models develop, we'll be able to sharpen our pencils on that overall, and that will be a driver of the return to profitability, because we are confirming what we've told you before, that financial services overall will be profitable by the second half of next year, and the banks overall will be profitable by the fourth quarter of next year. On the GFin side, that's the bank side. On the GFin side, it's already providing good risk-adjusted returns on capital. In fact, comfortably above the Grab's own cost of capital. So that's a strongly performing business with good returns. So we'll continue to do that across our ecosystem. Hopefully that's helpful, gives you some character of the way financial services is growing and continuing to improve. Thank you.
Thank you.
Thank you. Our next question comes from Venugopal Gar from Bernstein. Your line is open.
Hi, good morning, management, and thanks for this opportunity. I have two questions. First one is a question on management's guidance philosophy entering into this year. Now, we've seen in prior years that you have demonstrated a track record of beating and raising your numbers through the year. And of course, the implication of that is that you typically start with a softer guide at the start of the year. Now, my question is that while this time around your guidance for sales and EBITDA is pretty much in line with consensus, and of course, I'm ignoring Bloomberg's incorrect reporting on sales guidance versus estimates. Do you really see this juncture a room for upside to your guidance, and what have you broadly baked into the assumptions? So that's the first question. The second question that I would like to ask is a bit more medium to long-term in nature. Now, if I were to take a step back and look at the bigger picture, how do you plan to balance your priorities and the capital allocation between various initiatives, which I guess are put out there for you? Specifically, I would like to, sort of discuss autonomous vehicles versus, say, the widely speculated Indonesian M&A, as well as your expansion into digibanks. So how would you balance between these, I would probably say exciting, but relatively more resource-intensive bets? Thanks.
Hey, Venu, this is Peter. Let me take the first one around guidance philosophy. And I'm going to ask Alex and Anthony also just to chime in around your second part of the questions around where we think we'll from your question around priorities and capital allocation. So let me tackle the first one on revenue, on guidance itself. The 2025 EBITDA guidance is a 40 to 50% growth relative to 2024 levels. And the revenue growth that we're forecasting also is somewhere between 19 and 22%. It's a strong top-line growth. If you look at where we landed in 2024, we landed revenue somewhere around the 21% mark on a constant currency basis. Now, around guidance philosophy, and if you look at since we went public 2 to 3 years ago now, there is a pattern that you're seeing. And as a management team, we embrace the philosophy of beat and raise when it comes to our guidance, especially on the EBITDA side, as well as on the revenue. So when we put out numbers at the beginning of each year, we do bake in some potential uncertainties that we can't predict. And I'll give you a couple of examples of that. We looked at from a seasonality perspective, especially in the first quarter. The first quarter is a very important quarter for us, where we look at the Ramadan and the Lunar New Year, where this year it's a little bit odd, where we do have a convergence of those two festivities all in the same quarter, versus last year or previous years where the Ramadan actually extends to the second quarter of the business. The good news is we're seeing a very strong January so far, but it's too early to tell. So there is some uncertainties that we're baking in on the revenue guidance and the EBITDA guidance. Now, as the year progresses, and you've seen this in the last couple of years, as the outlook improves, and we make those adjustments to reflect the latest outcomes in the business. And also, we always remind our investors to take that lens when it comes to considering our guidance, especially at the beginning of the year when we put out there. Let me just finish off. Most importantly, we always take, as a management team, a balanced approach when we are driving two things. We're driving top-line growth, and you're seeing that momentum in the business. Second half was critical for us to exit strongly because that will set us up for 2025. And you saw that on-demand GMV growth at 20% on a year-over-year basis, and also maximizing adjusted EBITDA and free cash flow on an absolute basis. And we're very committed in growing that EBITDA and free cash flow in 2025. So, Venu, hopefully that will give you some picture and also how we think about our guidance philosophy. Now, your second part of the question, the there's an area here where I think we need to address, which I'll ask Alex and Anthony to chime in.
Yeah, thanks, Peter. Totally agree with Peter. And hey, Venu. So first of all, with regards to what Peter shared, I think we are very bullish. We believe that there is plenty of headroom to drive organic growth in Southeast Asia, specifically in mobility, in food, in groceries. The addressable market is still significantly undertapped. We've shown and proven we've hit an all-time high of 44 million MTUs, and this represents about 17% growth year on year. But we are still only serving 1 in 20 Southeast Asians. So we are actually just scraping the surface in terms of users that we can outserve across this region. So what does that mean for us? We are going to double down on the core because the core is still expected to grow strongly. And on top of this, we're also looking into new growth areas. Now, specifically, you called out AV or autonomous ride hailing. For me personally, AI and robotics are top of mind. As you know, when large language models were first released, we leaned in very early last year to drive Gen AI adoption across the org. Now, on AVs, we've been watching this space closely and are very excited about the long-term opportunity related to this tech. I personally and our leadership has actually taken many rides across the world, across various brands, just to understand and be forward-leaning in this space. We believe we are in prime position in supporting the AV transition over the next few years, and we have a very significant role to play in this region via a hybrid AV human fleet. When we think about our right to win, we have strong relationships with players around the world, as well as OEMs. We have the highest utilization across the whole region. We have a long track record of working hand in hand with regulators and governments to ensure passenger and driver safety. So as we think about this AV transition, we're also proactively thinking about how can we play a part on upskilling our driver partners as part of this shift, because that is core to our mission and an important aspect of our strategy. As we've shown before, we've collaborated with global partners like MasterCard and Microsoft and have a track record of working with governments and regulators to upskill workers, to upskill our driver partners, and to equip them for a more tech-enabled future. So going forward, I can confirm we are in active discussions with regulators. We intend to work closely with every government in Southeast Asia to drive this forward. We do anticipate a longer road to mainstream AV adoption in other parts of Southeast Asia. And this is because road infra is different, regulations are different, but we are very excited about this space. So in the meantime, we are actively pursuing several partnerships and we'll look to share more updates in the coming weeks. Alex, go ahead.
Thanks, Anthony. Yeah, and on the question of allocation towards organic growth, particularly Indonesia, we're very happy with the acceleration of our on-demand GMV overall as a group. In Indonesia, in particular, on-demand GMV grew 10% quarter on quarter, so faster than our overall group average, actually. It was an important focus for us in 2024, and Indonesia will remain a key focus for us to serve our drivers and merchants in 2025. I mentioned the partnership with Bluebird earlier, and we're also expanding our EV fleet with BYD. So we're adding more drivers and more merchants in the quarter. The online earnings for those drivers per hour and the average deliveries merchants earnings have also increased. So I think we have a very healthy and fast-growing marketplace. And we continue to invest not just in Indonesia, but across the region on some of our tech advantages like mapping, hyper-batching, just-in-time allocation as well. These are very difficult for competitors to replicate. So we're doubling down on organic opportunities in Indonesia and across the region.
Hey, Venu, just to add to Alex, from an inorganic perspective, because your question is around capital allocation and also where do we balance priorities, but then just chime in here a little bit just to give context. So as you know, we as a management team, we have a very high bar when it comes to inorganic opportunities. And these opportunities we evaluate on a case-by-case basis, but the bar is very high. We have to make sure that key synergies and value add is instrumental in these inorganic opportunities. And this is very consistent with our capital allocation policy that we've shared many times with all of the investors. In terms of the capital allocation framework, it's always been very consistent. Organic growth comes first in the business, and that's to drive EBITDA growth and free cash flow. And second is having that high bar on M&As that I just talked about. And then third, when there is excess capital as a priority, we will return it to our shareholders. So we're continuing to deploy those capital allocation framework, and 2025 is no different for us. So hopefully that's helpful in addressing your questions.
Thanks a lot. Yes, it does.
Thanks. Next question, please.
Thank you. Our next question comes from Alicia Yap from Citigroup. Your line is open.
Hi, thank you. Good morning, management. Congrats on the solid set of results, and thanks for taking my questions. Two questions. First is that can you share the updates on the cross-selling of the delivery business with food and mart? Can you compare and contrast the AOV for users that use both versus the user who only use food delivery? And how do you anticipate the increase in the AOV and the wallet spend growth of users on your platform over the next couple of years? Second question is, can management elaborate on how you foresee AI further enhancing your cost optimization efforts and the demand generation capabilities? Specifically, what is management view on China's DeepSeek model versus your experience working with OpenAI as your lighthouse partner? Thank you.
Thanks for your questions, Alicia. Let me take the first one on the ecosystem and cross-sell, because that's at the core of our strategy. You're right, cross-sold users continue to show improving uplifts Q on Q. So let me see, users who transacted in both food and mart have average spend, which is 4 times higher. And then frequency uplifts are 2.5 times higher. So this is a really key linkage in our strategy, and it gives us an advantage versus single vertical competitors in on-demand. The retention rates are also twice as high than the food-only users. So that's super important as we continue to grow and look for efficiencies with the scale. The ecosystem doesn't end with on-demand, though. As you know, the growth of financial services is giving us lots of opportunities too. And I don't know if I should, maybe I'll flag also that the groceries growth, grocery deliveries, is actually faster than the food delivery growth for the second quarter in a row. We're very excited about the potential here. The penetration of groceries is still very low in our ecosystem, and we intend to continue to grow this with strong partnerships market by market. I think what we've done with Jaya in Malaysia demonstrates what can be done to grow online deliveries as a share of overall revenue. And the tech that we've developed there very closely in Malaysia, we're now sharing with some partners like SM and Robinsons and in Philippines and Transmart in Indonesia. And that is powering this exceptional growth that we're seeing on the mart side. So for the first time now, we're actually, instead of selling from food into mart, we're now looking at selling the other direction from mart back into food from these new users who are coming into our ecosystem from partnerships. And then the financial services side, I think you can see from some of the slides that we sent out this morning, there's great acquisition opportunities. 90% of the GX Bank customers in Malaysia came from Grab, and the acquisition cost is minimal. The speed at which we've been able to gather deposits and open new accounts, we're now up to 4 million accounts across the 3 banks, is very, very pleasing indeed. And it shows the power of the ecosystem and the brand in low customer acquisition and cross-sell.
Maybe if I can just jump in and talk about the GAI and Specifically, you referred to OpenAI, DeepSeek, and other cost optimization efforts. So I think, Alicia, as a company, we've been actively really leaning in, I would say, in embracing GAI right from the beginning. OpenAI is one where we've been very blessed with being the first lighthouse partner that they chose in Southeast Asia, and we built a strong partnership with them to solve complex problems that drive benefits to our ecosystem users and partners. But we also work with other multimodal foundational models across the world. And let me share one example where we use multimodal models. Our merchant AI assistant. Our merchant AI assistant today, really addresses a major pain point. Today, many merchants, especially long-tail merchants, they don't have account managers and they need help. These merchants always crave more insights, especially insights on how to boost sales, how to target users, and they are really starving for these solutions. So what do we do? How did we leverage AI? We saw this as a perfect opportunity for Gen AI to enhance the earnings potential for our partners on our platform. By leveraging Gen AI, we developed a self-serve chatbot, providing our merchant partners with personalized recommendations, answering whether it's business-related, example, top-selling menu items, to how to be an even better chef, to how to be even a packaging master for their customers, and really gives them ways to optimize, for example, their recommendations, their ad spend, and their user targeting. As a result, we saw a 24% uplift in ad spend among merchants who engaged with our merchant AI assistant versus merchants who did not. And we saw sales uplift among those merchants as well. Now, for all our merchant partners who hear this, we highly encourage you to try this solution and hope that you will find it a useful tool to generate stronger sales. And let's continue to innovate together. But in short, I would say this: we are going to continue leaning heavily, Alicia, in Gen AI, and we're exploring ways where we can further integrate these solutions that drive higher sales, more productivity improvements for our workforce. 2025 is the year of agentic AI, and I foresee, or we all as a leadership foresee, that we'll be rolling out even greater personalized solutions for our ecosystem partners.
Thanks, Anthony. Thanks, Alex.
Thank you. Our next question comes from Mark Mahaney from Evercore. Your line is open.
I like this guy.
Okay, thanks. Two questions, please. First, MTU net ads were relatively high. Just talk about the source of where you're bringing in new users and anything you can tell about their engagement levels versus prior cohorts. And then I want to ask about consumer incentives. So they have jumped up both on the mobility and the delivery side as a percentage of GMV to pretty high levels, especially versus the last year or two. What I'm trying to understand is that something structural, or is that consumer incentive spend in advance or in alignment or in support of this, some of the newer products that you're rolling out on the value side, high end, low end? So just talk about what how we should think about those consumer incentives, if they're to support these sort of relatively new product launches, and therefore over time they should step down in intensity, or whether we are structurally at a higher level. Thank you.
Hey, Mark. Let me take the incentive questions, and I'll ask Alex to chime in. On the MTU front, it's a key focus area for Alex, and we're seeing some really good fruits coming out of that. So on the incentives, you'll see that our incentives, mobility and deliveries, move up and down quarter on quarter. And that's deliberate, and that's intentional, and it's in line with our expectations. A lot of that is driving product adoption in our business. And you referred to the MTU growth, for example, as a question of that, but also we're driving frequency in terms of our products. Now, as you know, we as a business don't operate to short-term margin percentages, but really focus on that dollar EBITDA free cash flow, and we reinvest in those areas to get product adoption. So there is a function of really going to market and using that lever to drive growth in the business. But you'll see that incentives move up and down. If you step back, actually, if you look at our mobility incentives and margin, it's actually stable on a year-over-year basis at 8.6%. And if you look at our deliveries margin on a full 12 months, it was up 90 basis points also. So we use that, the lever, as a critical factor on, especially on product adoption. Alex, do you want to just chime in on the MTU side?
Yeah, Mark, you're right. The MTU growth, in fact, acceleration is something we've been really focused on. One of the big drivers is the affordability products, both for deliveries and mobility. A third of the new MTUs this quarter were either new or reactivated users, and a lot of that's coming from the affordable products. We are balancing that with high LTV users, as I mentioned earlier, particularly travelers, which has been a big driver of new MTUs as well, typically spending something like more than 2 times what a domestic user would spend. So we have high value premium users growth as well. I can confirm that the product holdings of 2 or more is still more than 2/3 of our users. And so speaking, to Alicia's question earlier, we've still got really good cross-sell ecosystem performance. And then the older cohorts are also still spending more. So we're seeing deliveries are seeing growth across all cohorts, even for the pre-COVID cohorts of 2018, 2019. So I think what you're seeing is that our product-led strategy, more than our incentives, is what's enabling us to grow MTUs faster than the market. And although, as Peter said, we need incentives from time to time to launch new products, and we have been launching some really significant new products. For example, group orders and family accounts are viral products where the ecosystem starts to grow itself. That's a quarter-to-quarter feature rather than a structural change. Thank you.
All right. Thank you very much.
Thanks, Mark.
Thank you.
Next question, operator.
Thank you. Our next question comes from Jiong Shao from Barclays. Your line is open.
Thank you very much for taking my questions. I have 2 questions, but firstly, I have a follow-up on what Peter mentioned earlier on the guide. It's great, Peter, you say you started off the year with something conservative, and the base case is beat and raise. That's all we like to hear. Your guidance indicated although you didn't guide on a GMV, but only guide on a revenue, but it appears to indicate an acceleration in growth in 25 vis-a-vis 24. And your GMV and revenue have indeed accelerated over the last 2 quarters in a row. I just want to confirm that's still kind of the expectation reasonable to expect that accelerating growth in both food and rides is going to continue in 2025 vis-a-vis 24. That's my first follow-up, and I have 2 separate questions later.
Sure, Jiong. So we are seeing good momentum on-demand GMV growth. Simply put it, it's been a momentum that's been intentional on our part and driving growth. We just talked about MTUs for an example. But at the same time, we're also watching the dollar EBITDA and the free cash flow that we can generate from the on-demand business. What we expect going into 2025 is for that on-demand GMV growth momentum to continue. Alex talked a lot about product features and investments that we're making. Anthony talked about AI also as part of that. So it's a combination of all these things that we feel that we want to continue to fuel growth in our business. And we saw a very strong exit in Q4 that really sets us up nicely as we go into 2025. Hopefully that gives you a better picture.
Perfect. Thanks, Peter. My first question is that I know you talked about autonomous driving, robotaxi, and EVs in your press release, access to 50,000 BYD EVs. I want to, I know also Anthony mentioned those topics earlier as well. I want to understand a couple of things here. One, by using EVs, naturally they don't burn gas. Will that matter? How does that affect your margins? Like, does that make any difference for your long-term EBITDA margins for your rides business, for the mobility business? And then back to the robotaxi. I know you are focusing on sort of the autonomous driving / robotaxi. But on a high level, just for me to understand that, well, drivers' costs are kind of low in Asia. How the calculus works, does that make sense at all to have robotaxi in places like Southeast Asia or even in China? Just want to pick your brain on this. So that's my first question. Let me stop here.
Hi, John, it's Alex. Let me take that. Firstly, EVs, we're a triple bottom line company, so we want to encourage cleaner transportation. But we are also seeing that it reduces the driver's running costs. And that's important to us because our objective over time is to push out the price reliability boundary every day, improving bit by bit. And that means that we can take a larger share of the overall transportation TAM in Southeast Asia. We've been doing that successfully with a lot of tech improvements, as we've talked about on this call. But one of the drivers is the cost of ownership of the vehicles for our drivers. So we know that EVs, particularly with the price point coming down rapidly over the last couple of years, are one of the ways to unlock even better affordability. The infrastructure in Southeast Asia is improving. A lot of governments are leaning into this. So that's why we want to encourage EVs and work with some of these big partners like BYD. On AV, unit economics will also continue to improve. We know that the supply chain for AVs is built on top of the supply chain for EVs. So a lot of what I just said about the improving unit costs will translate through into AVs over time. This is not going to happen overnight, particularly in Southeast Asia, where labor costs are lower than places like the US. But it will happen. So as Anthony said earlier, we're really intensely leaning in, making sure that we're proactive, and we're one of the key players in leading how it is introduced safely into this region.
Yeah, I'll just add to Alex. Alex is totally right, John. The key as we think about AVs is not just AVs, is AVs as a hybrid fleet, complemented by human fleet. And we see a very nice symphony where there are areas that are poorly served. Say there are parts in Singapore. If you do live in Singapore, you'll see that there are areas that are, I would say, harder to serve by humans, drivers, and this is where robotaxi would really keep improving fulfillment rate and customer satisfaction. So those are places that are ripe for, I would say, introduction and pilots in the future.
Okay, great. Thank you, guys. And actually, my second question is about Singapore. We have seen the news today, or maybe yesterday, was about a corporate tax rebate, which is fine, but it's more interestingly or relevant to you guys. We have seen some talking about vouchers, pretty sizable vouchers for individuals and family to spend. For those of us don't live in Singapore, in this case, could you sort of elaborate on exactly what are some of those incentives? How long is that for the whole year? How does that affect Grab's business? I remember a couple of years ago, or maybe longer ago, when you went IPO, Singapore was a sizable part of the business, 40% or maybe even higher. So what is Singapore now as a revenue contribution to Grab's overall revenue now?
Yeah, John, let me take that. Look, the budget just came out a couple of days ago. We're still going through it. We're assessing it. I have to commend to the Singapore government in how they're supporting the economy and also for the everyday Singaporeans out there. We were excited in terms of what they're doing, in terms of vouchers, as you mentioned, tax rebates also for the businesses. Those are the right things. And again, Singapore is a very thriving economy. There's a lot of very strong businesses here, which is growing. And we believe that these things on tax rebate actually will benefit a lot of our small merchants that we operate with in Singapore today. We want to see more merchants in Singapore that we can actually support. For the vouchers, I think it's great for the economy overall, for the everyday Singaporeans. Again, they'll benefit from that. And also we see that as hopefully as a beneficiary of that as they use transport services and also use our food services. So I think overall, Singapore is thriving. Singapore is advancing. We're in lock and step with the Singapore government on many areas. And we feel that with all the services that we have, including the banks, we're set up to continue to grow Singapore.
Okay. Thank you, Peter.
Thanks, Young. Next question.
Thank you. Our next question comes from Divya Kothiyal from Morgan Stanley. Your line is open.
Thank you very much. Two questions from me. Just maybe it's a follow-up on the mobility margin. Product mix is definitely one of the reasons, as we noticed, that the Saver Rides is 300 basis points higher. But just curious to know if there are other factors that have also affected the mobility margin in the fourth quarter. Maybe if you can comment on the competitive landscape and how our market shares have evolved in various countries in 2024 versus 2023. And my second question is on corporate costs. They fell another 13% year on year in the fourth quarter. So we've been executing pretty well on corporate costs despite the tremendous growth we've seen in orders. Could you comment on the outlook for 2025 and if we can continue seeing this kind of savings? Thank you.
Thanks, Divya. Let me take the first one on the mobility business. We are very focused on growing affordability, and you can see that has helped us expand MTUs. It's also helped us to improve frequency across all cohorts. So we know this is a good strategy. We've launched some new capabilities in this sense. We've got family accounts for mobility, which is, I think, going to help us with frequency and retention. We've also got high-value rides and some new partnerships like Bluebird. Advanced booking for those critical like airport-type rides is also a new launch across all regions. There are always competitive factors from time to time in various markets. I can confirm that in every market we remain the competitive choice, leader for mobility across all of our markets. Overall, across the region, we maintained or grew our CP position. So I think we're highly competitive, particularly with these new markets. We are the only multi-vertical competitor across all markets in the region. So that gives us cross-sell benefits, it gives us scale benefits, and it allows us to continue to invest in some of the new technology like AI, where we can amortize those costs across a much larger user base. So I think on that basis, we're well set up, I think, for continued mobility growth. And I would, as I mentioned earlier, but I'll say it again, reiterate that we believe that our mobility business will reach 9% plus margins in the steady state.
Divya, on your corporate cost question, you're right. We've made a lot of progress in optimizing our cost base as we exit 2024. And what you saw in the fourth quarter was a combination actually of reductions in variable costs and staff costs also as we continue to tune our cost structure in the business. Now, as we think about 2025, with the strong on-demand GMV that we expect, there are variable cost components, things like cloud, direct marketing costs, which are housed in the central cost bucket actually will increase. That's natural. But we'll offset those by operating leverage also, which we'll expect to realize from the continued volume growth that we're going to see in 2025. Stepping back, we expect to see more efficiency gains in our cost base as a percentage of revenue, but we do anticipate corporate costs to increase just naturally because on a year-over-year basis, on an absolute dollar basis, as we make those investments in on-demand GMV growth, as well as also as we make into investments like what we talked about earlier in the call regarding AI, for an example, continued IoT investments, mapping infrastructure, which are all important pillars in making sure the foundation of our business continues to be solid. So we're making also those long-term growth investments as part of our regional corporate costs. But stepping back, what I can say is if you look at our group EBITDA to revenue margins, what we expect in 2025 as a revenue margin, we look to improve that by about 200 to 300 basis points in 2025. And that's because we're driving more operating leverage also in the business. So hopefully that gives you a bit of a picture in terms of how we think about operating leverage and cost structure of our business.
Thank you very much.
Thanks, Divya. Operator, next question.
Thank you. Our next question comes from Thomas Chong from Jefferies. Your line is open.
Hi, good morning. Thanks, management, for taking my question. My question is about our advertising monetization. Given our focus in technology and AI, can management share about the percentage of our merchants using our advertising solution? And how are we actually seeing their business performance versus those without advertising? And my second question is about our 2025 guidance, in particular about the Forex trend. Given that the US dollar, I think, depreciate from time to time, should we expect there will be two sets of year-on-year growth numbers, taking into account what it is for local currency versus those in US dollars on a quarterly basis? Thank you.
Hi, Thomas. It's Alex. Let me take your question on advertising, which obviously is one of the big drivers of our long-term deliveries margin target and is increasingly also contributing to mobility as well. The penetration of GMV for advertising did increase again, improved again to 1.7% in the fourth quarter from 1.4% in the same period last year. So that is a proof point of our continued traction we're getting on advertising. One of the big drivers for that is the penetration of our merchant base, which I think was part of your question. I can confirm that the penetration of the merchant base increased significantly over the course of that year. So more of our merchants are using our demand generation tools. The retention of those merchants on the advertising platform is very high, something around 75 percentage points. So this is working for them. Return on advertising sales is between 5 and 8 times on the platform, so depending upon the size of the merchant and the strength of their brand. So and yet the penetration of our merchants is still less than half. So I think over the medium term, and in fact throughout 2025, we will continue to drive the penetration. We will continue to improve the capabilities of the self-serve tools in particular, so that the very large merchant base that's on the Grab ecosystem, these tools available so that they can continue to grow their business and become successful growth businesses on the Grab platform.
Thomas, on your FX question, I think it was around how FX was impacting to our current guidance. Let me give you a few data points. On a year-to-date basis, we're facing about a year-over-year headwinds of roughly about 30 basis points. And on a Q-on-Q basis, FX headwind is roughly about 140 basis points on a year-to-date. And for the rest of 2025, what we, from a guidance perspective, internally here, we're using a prevailing spot rate in determining our current outlook for full-year GMV and revenue. And we'll continue to monitor that spot rate. Obviously, it moves around quite a fair bit. Again, part of that, going back to a couple of questions around our guidance philosophy. And at the beginning of the year, we tend to be a little bit more conservative on the FX side also. but that's how we're thinking about the FX movements.
Thank you.
Thank you.
Let me just wrap it up.
To Peter for any closing remarks.
Great. Thanks very much. Hey, thanks everyone for listening and investing the time for us today. In closing, Anthony, Alex, and I would just like to express our sincere appreciation to all our drivers and merchant partners. We had a great 2024. All of that was not be able to be accomplished without the support from all our drivers around Southeast Asia and to our merchant partners that we serve. Also to all our customers out there who's vividly continuing passionately to use our products. Thank you very much. And also for our shareholders for all their continued trust in Grab, and also for the Grabbers out there who's really been spearheading the growth of our business in the last 12 months and really just supporting the business. So thank you to all these folks. Together with the IR team, Ken, Doug, and I will be on the road over the next few weeks. We'll be attending various IR conferences across the US West Coast and also in Asia in the coming weeks. We'd love to see you, meet up with you, and approach us, any of us, the IR team, if you wish to meet up as we spend some time meeting investors over the next few weeks. Thanks again, everyone, and have an awesome day. All right, until next quarter.
This concludes.
All right, cool. There we go. I'm going to be honest, by the last 20 minutes of that call, I kind of zoned out and I didn't hear everything. So I will listen to this again like 3 to 4 times. That's usually what I do with earnings. It takes a couple times to really get the gist of it. But I mean, look, overall, I think the quarter was good. I think that people had crazy expectations. They expected it to move like a small cap on a stock that has 4 billion shares outstanding. And the party's over. That's not happening, which means you leave the stock, right? If there's other opportunities for your capital, then you go in other places. I wrote this up on Twitter just now. It's just like, not every stock goes up vertically. Companies have to go into their narrative. Grab doesn't have AI or crypto. The parts of the call that I heard, I thought were very, very good, especially the answers in regards to advertising, GMV incentives. The amount of questions, I think there was at least 3 out of the 10 questions, so 30% of the questions that basically said, hey, like, we know you're sandbagging, and we want you to admit it so that we can give you a price target upgrade because we know this EBITDA number is BS. We know you're going to give us a higher number, but can you tell us you're sandbagging? And then Peter and Anthony, the CFO and CEO, are basically saying they're sandbagging without legally saying it because they're not allowed to. So I think tomorrow will be interesting to see what the upgrades look like or the downgrades. But for longs, I thought this was a great quarter, and I'm happy that everyone who bought into it just to buy in because they saw it on X or YouTube doesn't care about it anymore. They can sell out, and whoever wants to stay in the party can stay. But the overall idea that this would go up just to go up is probably not going to happen, which is okay. That is okay. I think it's important, dude. I think it's important. It is really important to get out of a name if you don't have a thesis on it. Like if it's a trade, that's one thing. And if it's a trade and the trade didn't work, then you take your loss and you move on, right? But if it's an investment that you wanted to, or it's a trade that you want to be an investment, but you didn't have any expectations of, like, I mean, perfect example right here is SMCI. By the way, I'm going to be on for like another 15 minutes. We got the overnight markets at 8 o'clock. So we'll see how Palantir, Robinhood, all those guys open up. SMCI, right? I didn't have a thesis on SMCI. It was purely a trade. So I sold it when it was 42. I bought it at 33, made about $3,000. But if I had a real thesis on it, like Steve does, I mean, Steve's holding on because he thinks it could hit 70 or 80. So he has a thesis. He has an argument in his head, and maybe he'll be right, maybe he'll be wrong. But the point is he has a plan. I didn't have a plan for SMCI, which is why I took my profits early, and I can't complain that I took my profits early because I never had a plan in the first place. I would have taken my profits today if I held on to it and maybe missed out a run going into 70 or 80. So to me, it's like my thesis on Grab is very simple. I think it gets to $10 by 2027. And if that is the case, the options that I'm in, the derivative contracts, will 7x over 2x. A lot of people are like, well, why are you in this for 2x over 2 years? First of all, 2x over 2 years is not bad. Like, I know we got spoiled with a lot of these names going up in 2024, but a double in 2 years is not a bad thing. But the derivatives that I'm in can go up 7x. And so it's an asymmetric bet. That's one of the more asymmetric bets I see in the market, in an emerging market, that I do think is catering better than the expensiveness of the United States. And as a result, that's my bet. But I'm realistic about those expectations, right? I think you kind of have to be at the end of the day. Yes, I'm canceling the party for those that thought it was going to $10. Dude, $10 would be a $45 or $42 billion market cap. That's just like, that was never realistic, dude. It was never even my really bull case was like, I think they can get to 580, 590 today. And they lowered their EBITDA guidance, and so that's why they're not there. That's why they're down 10.8%. Now, in terms of buying this dip, I got to see how the stock opens tomorrow. I mean, I want to give it a little bit of time. I'm already loaded up heavily on Grab, so I don't really feel the need to buy a ton more unless it really gives me a good opportunity. Same with Hood, dude. I mean, to give a little bit of credit to myself, usually I buy the Hood dip. I didn't buy it today because I was just like, no, they're basically giving back everything that they had on earnings. It went from 67 to now 58, and during the day it was at 59. And I was tempted to buy, but I'm also like, well, if the market's going to give it back, I'll wait for a good opportunity. I'm not just going to blindly buy the dip because I have to. Also because I have enough Hood, so it's not like I'm dying to get that much more. So I don't know. I think markets are a little bit frothy right now in terms of expectations, even if not in actual valuations. Even though some names obviously valuations are up there, and we're going to have to get through it over the coming months, but it does seem like people's expectations are sky high. SMCI right here down about 2%. Celsius still holding 15%. That one's doing great. And Celsius shareholders have dealt with some pain over the past 5 months, but getting a little bit of relief right here up 15%. If you came in at the bottom at 21, that's doing very well. Palantir down another 5%. We'll see how it opens in the overnight markets. Is at 106.3. 105.9 was the bottom a couple hours ago. So we'll see how that opens up later as well. Shout out to Jason. It's not fair, Amit. You owe me a party. Dude, I had a blast with Jason in California. He took me around in his Cybertruck, and it was super cool, dude. It was so nice to meet someone in person and just like connect after talking. He's the same as the same way he is in person. Although he doesn't know how to use Google Maps or iOS Maps. I'm gonna call you out on that, Jason. He was just like, how do we get there? I was like, bro, you can do all this TA. You don't know how to use Google Maps. He was like, shut up. Just show me how to get there. I'm like, all right, but it's like, it's not that hard, dude. I mean, I feel like finding a higher high or lower low is a little harder than using Google Maps here. But yeah, I have to call him out on that. We got to meet up with another subscriber, Vin. Got to get some coffee with this guy. So this was super fun. Super fun in California. Matt says Amit's trying to make me wait 2 years until Lambo. Matt, Rocket Lab, bro. Maybe I sold those puts a little too early. I guess we'll see. I wouldn't mind buying it at 22 though. I mean, like, I feel like that would be a nice little entry spot to get in. And if it actually drops below 22, I would just buy the stock instead of sell the puts there. But even Rocket Lab, it was having a green day and then it fell 6%. I mean, a lot of these risk on assets took a little bit of a dip, and I don't think that's the worst thing in the world. And I think Matt's also very realistic about Rocket Lab as well, given he was in the name at $4 and now it's at 26. Like, he knows it could fall 10%, and that's not crazy if it does happen. NYC Arenisa says, I've ridden SMCI from being 40% down to now over 40% up. I'm with Steve on this one. Just need the 10K to drop. The only fear I have about SMCI is the 10K drops, and there's inconsistency in what the 10K says and what management said on their quote-unquote earnings, because it wasn't actually earnings, but it was earnings. That's the only fear I have. But as long as that's not the case, then, you know, hopefully SMCI gets a little bit of a moon once that comes out. The other bear case is that it's being priced in right now. Once the 10K is being factored in currently these prices. I don't know if that's true. I guess we'll find out. But as long as they release it, I feel like that's bullish. All right, overnight markets have just opened. It is 8 p.m. Palantir 5.17%, 106.27. That is down. Robinhood is down another 2% overnight. Actually, hold on. Weeble's updating in like 30 seconds. Let me check Robinhood itself. Yeah, Robinhood. Okay, so Palantir 106.2, Robinhood 58.04. Grab ended the day down 4.74. Tesla is actually green, 360. Reddit 188.60. Reddit also took a nasty haircut from 230 to 188, which I think is very reasonable. SoFi. Why is SoFi down 1% overnight? I'm not sure, but it is. It mooned to 17 yesterday, and now it's like I don't think there was any news that happened here, so that's kind of weird. That one's down 1%. Nvidia down another 0.16%. Again, Tesla's green, S&P 500's green, Celsius flat overnight, SMCI down about 3%. Lockheed Martin and all the defense contractors were fine. Palantir was the only one that really got hit from this defense contracting news, or from the Pentagon news. But a lot of the other defense contractors were okay. Cheesecake did report already. They had a good earnings, not a, nothing special. Kind of same thing like Grab, right? It was good earnings, but nothing crazy. Cheesecake right here was down about 3% during the day and flat overnight as well. All right, there we go. That's what we got. That's what we got. Palantir 106.3. Tomorrow's going to be interesting, bro. Tomorrow's going to be interesting. I think we're going to have to see how the market this is not healthy volatility that could have a reversal, right? It might be healthy in the context of Palantir was overextended, but in terms of like seeing a little bit of an uptick or a reversal, we didn't see any of it. Not in after hours, not in the overnight markets. I guess in pre-markets, we'll see when more volume comes in if people buy this dip, but either it was algos, it was toots, or retail just saying, screw this, I'm out. I think Palantir's already extended. I made enough money and I'm selling. Or it could have been algos, but I guess eventually we'll figure out over the next coming days. Tempest AI overnight. Tempest AI is down 3% after being up 4% on the day. Jason says it's a win for long-term investors teaching patience while being down 6 figures with market at all-time highs. Yeah, I agree. Patience is one of those things a lot of us forgot about given how good 2025 was. 2024 was. But it's okay. It is okay to have a little bit more patience when it comes to these names. Why will tomorrow be interesting? Well, I'm just curious if people buy the dip on Palantir or not. Like, I'm really curious. Is this a buy the dip? Do people get excited for it? Or like 15% down is a legit dip, but still, this is not the NVIDIA DeepSeek thing to me. The reason it's not is because when NVIDIA fell to 113, it was like ridiculously cheap. Palantir falling to 106 is not ridiculously cheap. We know this, right? Like its price of sales is 90 instead of 100. Okay. You're paying 90 times price of sales. Again, on this channel, we've been saying the valuation is extended, but there are other ways to justify why it's trading where it's trading, which in turn qualitatively can make sense of the valuation if it doesn't even justify it. So I don't think it's NVIDIA because NVIDIA fell and it really got cheap. Palantir falling is not cheap. Now the question is Palantir falling algorithmic enough where momentum drives it back up, because momentum driving it down was never real momentum. Whereas NVIDIA was a real dip because people were legit scared. I don't think people are scared about the Pentagon on Palantir. That's just that's a stupid reason to be scared, in my opinion. Maybe I'm undereducated about how much money they get from the Pentagon. Robinhood right here down 2% after hours. Palantir is at 106.87. But I don't think that is a legit reason to be afraid. Now, DeepSeek, although it turned out not to be a legit reason, it makes sense in the moment why people thought it was a legit reason. It's just that moment lasted about a week before people realized it's not that serious. I wonder if this lasts a week or if people take this as an opportunity to compound the selling on Palantir, which is why tomorrow we're going to see how this ends up playing out. Momentum builds momentum in both directions, 100,000%. 100,000%. And that momentum could be to the downside as well. Forward PE of Grab on 80 is meh. Well, look, I agree. The forward PE is not cheap, but I think if you're using forward PE or price of sales to look at a company like Grab that's just inflecting in free cash flow, earnings growth, and profitability, it's not the best metric. A lot of those using that would have missed Hood, Palantir, Rocket Lab, etc. So the reason Grab is down is because they're adjusted EBITDA guidance, guys. That is my take on this. It's not because their forward PE is high or their price of sales it's all about the street giving them a multiple on adjusted EBITDA. They expected 500 million. They come in at 470. I think that 30 million is not going to be hard to achieve, at least in the next couple of quarters in terms of raising the guidance. But in the short term, yeah, the street's going to punish them. And I think that's some of the pain that we're seeing right now. It's going to depend on the macro as well. Yeah, the other thing on Grab, and we've been saying this since January, that damn dollar is still green. It is at 107, dude. This thing needs to come down for companies like Nubank, Grab, Mercado Libre to get a little bit of a tailwind. And given what Trump's doing with the tariffs, I don't know when that comes down. So that's another part of the puzzle that I think we're going to have to figure out as well. Are you holding or selling Grab? I'm holding because I believe in 2 years this is a double. If you don't like that expectation or you don't want to wait that long, then it's up to you. But personally, nothing in this quarter gave me a reason to sell at all. Sandbagging guidance is not a reason to sell. But I can understand why the street took it down. Dude, Palantir is selling 1.5 billion. Yeah, it's going to tank it. Well, so again, Carp is selling 1.2 billion. Look, if people want to sell because Carp is selling, again, I understand that as a narrative to drive the stock down. It's just Carp has been selling for years, and that narrative has not played out. Obviously, because Palantir has done well over the past couple of years. So I don't know, dude. I think it's more so Palantir's trading at an extended multiple. People are afraid about the fragility of the stock. And then you got the Carp selling news and the Pentagon news, and it compounds on people's fears of the stock being so high already. And when I mean people, I don't mean people like you guys that have been in the stock since 20 or below. I'm talking about people that bought in at 80, 90, 75, 70. They bought right after earnings because they thought it was just going to go to 200. Like, these are the people that have anxiety right now. And quite frankly, they should have anxiety because, like, if you buy into that momentum, you also have to be ready to deal with the dip. Same thing on Robinhood, dude. I bought Robinhood at 62. There's no anxiety that Robinhood's back to 58. In fact, if it goes to 45, I don't care because I've been in the name so long that would be a great dip. And I have a lot of conviction on Hood. But a lot of people that bought Palantir, they don't have any conviction. Same thing, a lot of people that bought Grab, they have no conviction. And so it's a lot harder to deal with it when you don't actually care. What is sandbagging? Sandbagging is essentially giving, this is what Palantir has done really well over the past couple of years. In fact, it hasn't really been Palantir's. Palantir wasn't doing the sandbagging. The analysts were having low expectations that were severely underestimating Palantir's growth, which is why they came up with 36% growth. And that changed the narrative on the stock as well. So sandbagging is basically when you guide for a earnings metric that is significantly lower, or at least partially lower than what you think you're actually going to do. SoFi does this a lot as well. But you don't want to give the actual metric because then there's no upside. It's under promising and over delivering. And pretty much NVIDIA has done this for the past 5 quarters, right? They guide for 35 billion in revenue, they come at 37. Or 2 quarters ago, they guided for 27 billion in revenue, they come in at 32, right? Like, you have to beat the expectations because the psychology of Wall Street, which I've learned painfully over the past couple of years, is that, this Robinhood Q3, right? They missed by 1 cent. And then boom, the expectations. And now this time they beat by like 40 cents on EPS, which is why they were rewarded. But when you miss, the street's already baked in a certain level of how they think your stock will act. And if you over promise and under deliver, it can get hit a lot more as well, right? And so I think they are deeply sandbagging their adjusted EBITDA. Sandbagging is the excuse for missing. For some companies, yes. For other companies, no. And the reason I'm so confident in Grab a sandbagging is because they guided for 180 million of EBITDA in 2024. They ended the year with 313. So that's a 55% increase in EBITDA over 4 quarters. They're growing revenues from 17% to 22%. I don't think they're going to decline EBITDA growth from 65% to 43%, which is what their guide says. But I think they know they have to sandbag. I think it's not easy to, because then the street's expecting more than 500 million if they guide for 500 million. So if they guide for 470 and get to 500, then I think it's easier for them to navigate it. Did you cash in any Palantir today? I could have been at 10x. No, I didn't sell any Palantir today. I can understand a lot of people freaking out. Dude, I didn't even know the stock was tanking. Like, I was about to go live. I was getting my market. First of all, I didn't even tell you guys this because we got straight into the market close. After the market opened, I fell asleep. So I woke up in the morning shivering, freezing. I was like, damn it, I'm sick. But I got up. I checked my temperature. It was 98.9 Fahrenheit. So I was like, okay, so I'm not sick because you have to, to be closer to 99, 100. And so I took some Tylenol, drank some tea, and I was good to go. Did the market open, had tons of energy. After the market opened, dude, I don't know what happened. I just started shivering again. I went back into bed, and I think I went into bed at like 12:30, and I woke up at 2:45. In fact, I thought I missed Grab earnings. I was like, what is that? I was just like out of it, and I was shivering again. And so I woke up, got some lunch, popped some Tylenol, and I don't know if I have a fever, and it's just like being suppressed by the Tylenol, and it's getting ready to come back. But I guess we'll see tonight after I end this. If I'm still sick. So then as soon as I get ready for the market close, where I'm expecting it to be Grab centered, I get a call from Jason. And Jason's like, yo, have you seen Palantir? I was like, no. And then I look, I was like, why are we down 11%? I was like, what is going on here? And then I saw the Trump headline. And so like, I didn't even really get a chance to internalize what's going on with Palantir, but then the sheer amount of messages of people that were scared and they're like, just like freaking out. I'm like, oh, we've got an issue right now. We've got an issue. People's expectations are beyond insane. Like, I don't think people realize that it's okay for a stock to take a breather. That doesn't mean we have to go back to 60, but it also doesn't mean we have to go back to freaking 150, right? Or go up to 150. And so I was on the phone with Jason literally until the beginning of the market close, and then we just got into it. But I don't think anything fundamentally changes the Grab thesis from this report, or the Palantir thesis from Carp selling, or what's his name? Trump cutting the DoD spend. Call Steve. Call just texted me. Call just texted me, dude. I'm out of it. Steve just texted me and he said, call me before you go to sleep. So let's call him right now. And just warning you guys, he's about to go off on Palantir because I know him. I know that's exactly what he wants to talk about. He'll be even happier that it's live. So just get ready if he picks up.
So,
Steve, I am live on not the market close, but everyone can hear you. So yeah, you're live with me.
it's 8:11 at night.
Yeah, but we had Grab earnings, and so I had to cover it.
You're working overtime. Look at this. I like the hustle.
I'm working overtime. That is correct.
I'm still trying to get through my emails for the day.
Yeah, you had a busy day, bro.
I still have 113 emails that I gotta go through.
Are you one of those types of people that gets emailed to like inbox zero? You're that type of guy?
Say that again?
Are you the type of guy that tries to get inbox zero?
It's nice not, up until a certain point, but it's nice not going into the next day with a ton of emails because people aren't waiting on you. I was stuck in meetings all day, so I try to be as responsive as I can, even if I have to crack at it for a couple hours at night, but it is what it is. Comes with the territory.
All right, so I got a lot of people in the chat with me. I know you wanted to talk about this, and I think this is one of your moments where a little bit of sanity is not too bad. Palantir right here down 15%. I think the majority of the chat understands it, but there are some people that are freaking out. What is your interpretation of what's happening right now?
I'm going to say something that may shock you.
You're buying the dip?
I don't think that the headline was a good enough reason for it to sell off.
100,000% agree with you.
Look, and you know that, I try to be as objective as possible.
I agree.
And not have any bias in this.
Yeah.
And the fact that they want to have a 6% reduction in defense spending does not mean that Palantir is not going to get new contracts or current contracts are going to get canceled.
Yeah.
I would have rather seen it go down 30-40% because it's just too expensive for their revenue and profitability than to go down $17 today because of a headline on something that may or may not impact them. It's just ridiculous.
So here's the question. So you're saying, and you've been consistent about this, that it should go down 30% based on the overvaluation. However, you need a catalyst sometimes to make that happen. Do you think this is the catalyst?
Too early to tell. This could be back up tomorrow. You know what I mean? Because, look, if they want to cut 6%, wouldn't you think that they'd have to spend more on software?
Yeah. That was my first take.
I'm actually surprised that the market didn't take this and send Palantir to 150 on that news, creating a narrative of, well, they want to cut out spending. It looks like they got to get everything on Foundry and redo the procurement system and this and that. I was actually surprised that was the news that took it down.
Dude,
out of everything, that was the news.
I agree. So how I interpreted the news is that Palantir's overextended and the market, because Raytheon, Lockheed Martin, all of those guys were fine. I think the market was waiting for a catalyst to tank it. And they used this catalyst.
I don't think it's the right catalyst.
I agree.
It is what it is. I don't know. It's weird because I didn't think the headline, I thought the headline was a nothing burger for Palantir.
Well, so here's the other headline. I don't know if you saw this, but Carp's 10K came out, or the Palantir's 10K came out, and he's going to sell 1.2 billion of stock, 10 million shares by the end of the year. And the business media, CNBC, Barron's, et cetera, they kind of, pumped up that headline. Do you think that could be a reason why it's falling too?
Yeah, look, it's never good when you have this much insider selling. Okay? And granted, I get it that their shares were locked up for a very long period of time. And they have every right to sell shares, especially when it goes up, et cetera, and now they finally have a public market to reward themselves for decades of work. I get it. But at the same time, you don't have any insider buys. It's all sales. So I didn't read into it too much. I would be interested if there are warrants that are getting exercised and all the mechanics behind it. So I got to do some more due diligence on it. But if I was Carp, I'd do the same thing.
Yeah, if I was Carp, I mean, dude, he's had these shares for 25 years. Like,
Can anybody say they wouldn't do the same thing?
at a $300 billion market cap? No, people would, I mean, people would take
I
some.
would do the same thing. Well, let's just say this, it's not bullish. We can say that.
Yeah, I don't think it's bullish, but I don't think it's bearish. And so, but that compounding with the stock, the Pentagon news that, you know. That,
yeah, listen, I wouldn't be mad if Palantir goes down to 70.
well, I think a lot of people would be ready for that dip, but I also think that a lot of people, I did say this before you called. I said, you know, you and I have had friendly debates about valuation versus momentum. The one thing you've been spot on about is that the people buying this, thinking it's going to just go up and up and up, they might not be right. And
so I'm going to stop what I'm doing. Can you humor me for 3 minutes with something?
How'd you come to 180 seconds as the amount of time to humor?
I don't know. Because I figured that's how long it would take me to put my laptop to the side, plug my mouse into my other computer, and do what I wanted to do to get the right numbers. That's how.
Why are you plugging your mouse into the computer? You don't have wireless mouse?
So I do, but so I use a huge monitor, and I pulled my laptop out just to go through emails. And instead of using the trackpad on the laptop, I hooked my mouse up to it because it's just easier. So I need to move my mouse back to my main computer.
Okay, we spent way too much time discussing this, but yes, what do you?
You're the one that asked.
That's true. That's true. All right, what is your humor?
You're the one that asked, not me.
All right, I thought you were going to ignore the question and say this is stupid, but anyway, what are you going to humor me with?
Yeah, I need to find 3 companies. Okay. So
Are you just gonna compare metrics to Palantir? Is that what we're gonna do?
No, I just want to go over business 101.
Okay. But Steve, we've heard your comparisons. No one disagrees with you on that. I'm just giving you credit for saying that people that you say constantly are just buying it because it's gonna go up. Yeah, market's not always like that. And I think
I don't like seeing people lose money. And I don't think that that's something that, should be taken lightly. Like, I really don't want to see people lose money. And I want everybody to make money in the market. But there's a difference between investing and being crazy.
Yeah.
Like, I'm sorry, but buying Palantir at 115 is kind of crazy, in my opinion.
I mean, look, I have not bought since 65, so at least my perspective has always been valuations up there, but I understand why other people are buying, even if I'm not partaking with them. No, and I think I think that's the majority of, like, I even asked my chat this morning how many people are buying. 95% of people said not me, but it was hitting 125 in the morning, so someone's buying. And if it's not the people in the chat, it's probably other retail or other toots. And if it's other retail, they're not in this chat,
It just doesn't make any sense. And yeah, it's probably big money coming in and whatnot, but this isn't the time to freaking play catch up on something that you may have missed. That's my biggest thing. I just don't understand it.
It's okay to play catch up if you come with the assumption that you're ready to DCA. But like, if you come with the assumption that I'm catching up because it's never going to be the same color as ketchup, which is red, so I'm just going to keep catching up, then, you might end up getting upset if it goes red.
I mean, that's not a bad analogy.
I thought it was a pretty amazing analogy, and if my soundboard was hooked up, I would have pressed the button to clarify that. But
yeah, I mean, look, I don't think it's a bad analogy at all. And it's just, I love Palantir as a company, and what it frustrates me is when people sit there and make these comments. And I shouldn't say frustrate me because I really don't care, but I do think it's funny when people are like, "Oh, he's going to miss out on this. He's going to miss out on that." Like, news for everybody. I may know what I'm doing. I don't know. Like, I may know something about something, and to say that I'm going to miss out on something, I don't think so. And if I do, so what? Like, it's just
no. It is what it is.
Still shareholder of Tesla and Palantir. That's what I don't get.
Okay, so here's the most important question: do you think tomorrow's an opportunity to actually buy back some of the covered calls, or no?
No. This thing's gonna. this thing, whether I buy it back tomorrow, today, wouldn't have really mattered that much in the grand scheme of things. Like, I'm waiting for this to keep coming down.
Yeah, but my thing is
an uncomfortable amount of money to lay
out. But this is where I disagree with you sometimes. Like, do you think you're getting a little too greedy? I know you think it's worth 70 or whatever, but if the market's not going to give you that as easily, do you think you're asking for too much?
No, because I will accept the fee and pay the pipe. That's the difference. Like, I'm betting on the market turning on this, and if not, I'm ready to write a bigger check.
Yeah, that's fair.
So here's where we are. Lockheed Martin, okay? I need to pull in the market cap real quick. It's 100. This is disgusting. Lockheed Martin has $100 billion market cap. Are you kidding me?
Well, they don't have the ontology, bro. I mean,
right? They don't have the ontology.
No, but I'm serious. They're a hardware company. Like, it's like
right. No, I get that, but they make money, right?
But they make as much profits.
Oh, yes, they do.
Money is different than profits. You know what
it's
I mean?
292 right now. So they're 3 times as big as Lockheed. Lockheed Martin generated $71 billion in revenue and has $100 billion market cap. Palantir generated $2.87 billion in revenue and has a $290 billion market cap. Probably 260 now that it's down after hours.
Yeah.
It's just, EBITDA. All right. $8.4 billion for Lockheed Martin, $310 million for Palantir. Net income for Palantir, $462 million because of all the interest income. Lockheed Martin, $5.3 billion. I mean, you look at the cash flow that these companies are generating. Lockheed's doing $6.97 billion in cash from operations. Palantir's doing $1.15. Like, I'm sorry, but you're pricing, not you, but people are pricing in so much future growth. It's crazy to think that a company that is doing $1.15 billion in cash from operations versus a company that's doing 6.9 is trading for basically 3 times more than market cap. It's crazy.
Well, so here's I agree with all that. Here's a question. So, in the past couple of days, we've seen AI startups raise at, I would say, pretty aggressive valuations. Is there a world where the market's comping Palantir to some of those valuations? Because when Ilya, the co-founder of OpenAI, can raise a startup at $30 billion with no product, I mean, what does that do for the public markets, right?
Not good. It's not good because there's no guarantee that they're going to generate their investors' money back in profit.
Yeah.
Like, you can generate the money back in revenue. That's great. That's fine and dandy. But can you generate in profit to actually repay your investors and clear the debt off the balance sheet? I don't know. But that's a crazy valuation on something that doesn't have a product.
Yeah. I am getting a little scared of these public or these private market valuations, dude. Like, I don't get it.
Really think about this. Like, roll with me on this. Cisco. People hate hearing me talk about Cisco, but it is the greatest thing to talk about because Cisco is a company that was the backbone of the internet when the internet was born. The backbone. It is a company that still to this day has not reached its all-time highs from the year 2000. 25 years later, still has not reached its all-time high. But guess what? Their revenue and their profit is exponentially higher than it was. I mean, this is a company that today is doing $14.5 billion in EBITDA and $9.2 billion in net income. And the market cap, $260 billion.
I mean, so let me read you this. Let me just read you this, and I want to get your take on this. So Loop Capital came out with a $140 price target. So they're beating Dan Ives. Let me just read you what they said. Palantir is well positioned within the AI and Gen.
Is that freaking Munster?
No. That's, I don't think that is that. No. He's in Deepwater. Loop Capital. Is
Oh
it?
yeah, you're right. That's Deepwater Asset.
Yeah.
It's Loop Capital.
Loop Capital's actually been one of the most bullish. They have like a 250 price target on Nvidia. They're like really bullish on AI.
Okay, read me what they said.
Okay. Palantir is well positioned within the AI and Gen AI sectors, which represent massive market opportunities poised to create several multi-billion-dollar revenue companies. The company offers a modern AI data platform. Palantir's platform is distinguished by its ontology. Now, here's the main part. Valuation is the primary concern, trading at nearly 44 times EV to 2027 fiscal year revenue. While we recognize is steep, while we typically avoid recommending software companies at such high multiples, Palantir's potential as a market leader in AI software, which parallels to Adobe in digital marketing and Salesforce and cloud, makes it a compelling long-term opportunity. If you share our belief in the transformative potential of AI and Palantir's leadership in the space, we suggest holding your nose on valuation and establishing a startup position with plans to add aggressively on pullbacks.
I don't disagree with that because they're using the keywords long-term.
Yeah.
And most long-term investors have a 5 or 10 year time horizon. So do I think Palantir is going to be have a higher share price and have a higher market cap in 10 years from now? Yes. And I've always said that. But that doesn't mean that the valuation today makes sense or that the chances of a drawdown is not probable. That's the big difference right now.
Yeah. I agree with that from the perspective of, hey, if you go long, then you get ready to buy. But at least they're not saying, it's cheap, right? And that's the difference. Now Davis right here makes a good point. Ask that analyst what his price target would be if Palantir was only 50 today. That I 100% agree with. If Palantir was 50,
yeah, I mean, it's a no. We're not seeing like a full-blown analyst report. So it's a no. And I like it. I don't think they're wrong, but I would like to know, just like your commenter said, what are the numbers they're looking at? I would really like to know.
Dude, they're using 2027 revenue to, like, all these analysts, even Mariana, as much as I love her analysis is bullshit when it comes to valuation. She's using 2035 earning. Like, are you kidding me? You're going to go that deep into the future? Like, none of these analysts can make sense of the numbers, and they all know it. At least Dan Ives is honest about it. Dan Ives is like, dude, I don't give a fuck about the numbers.
And you know what? You got to give Ives credit because he's never cared about the numbers. He's always said things can make sense or cannot make sense for a very long time, but if you only care about the numbers, most likely you're going to miss it. So I get that. I can respect that.
Yeah, I agree.
I can absolutely respect that. But I mean, listen, just go back to Cisco real quick. In the year 2000, check out these numbers. $18.93 billion of revenue. In the year 2000, they did net income of $2.67 billion. In the year 2000. So they've grown their revenue by 186%, but that 186% is $35.5 billion.
Yeah.
Their net income has grown by, one sec, $6.5 billion, 244% over the past 25 years. So that's a lot of growth. And they are still at a market cap of like 250, 260 billion. Still not near where they once were. And for everybody who says that Cisco is a boring company and all this stuff, you would not have the data centers. You would not have the back-end infrastructure if it wasn't for companies like Cisco. They play a critical role in IT. They don't get enough credit, and their profitability is insane.
Yeah.
And the profitability is a testament to how trusted their products and software is amongst businesses. And they have staying power. Been around for decades. And they're generating $54 billion in revenue, $12.8 billion free cash flow, and over $9 billion of pure net income. $14.5 billion in EBITDA. And people want to think that buying Palantir at these levels makes sense? Come on. It doesn't make sense.
It makes sense if you're playing momentum. If you're playing valuation, obviously.
Sure, for trade, momentum, you won't hear me complain about that. If you're trying to make money on a trade, Palantir has been a great vehicle for that. You can't fault anybody for that. But what I'm saying, if you're trying to take a long position here, I don't think that's a great idea.
Yeah.
Like, where was everybody at third? I'm not even going to say 15 or 20. Where was everybody at 30? I mean, we got into the S&P of what, 38?
Yeah, no, 30, no, it was a 29 actually.
Was it 29 we got into?
Well, 29 they announced it, 38 we actually got into, yeah.
Right. So we got into S&P under 40. So you're telling me people are waiting until the hundreds to buy?
See,
Like,
some people in the chat saying they sold at 30. So there's obviously a little bit of FOMO as well that people are having because they're annoyed, right? That they
right. Listen, FOMO's real, and I get that, but at the same time, you can't be mad at selling and making a profit. Because at the end of the day, you made a profit. You made money. You didn't make as much as you wanted to, but you made money. But people trying to chase at this point, and that's what I think a lot of people are doing, is I think they're chasing. Yeah. And it's worrisome to me because while this is not 2021, it's starting to feel a little bit like 2021 in some respect without the macroeconomic stuff.
That, I agree with that. It is starting to feel like 2021 in some respects. Like the meme coin stuff is really pissing me off. But the macro is good.
The macro is great.
Yeah.
But here's the problem. People are getting away. And I remember having this conversation with our old CEO. And we're looking at each other and we're like, man, all these people think if you make 12% a year in an index fund, you suck. And we were at a point where if you weren't making 40 or 50% a year on a stock, you were pissed.
Yeah.
I mean, we're starting to get back there. You look at HIMS. HIMS is up 650% this year. I'm not knocking HIMS. I haven't done the due diligence on it, but I mean, there's a lot of stocks that are up a lot, more than what most companies go up in that time frame. And it's feeling like we're getting to a mentality of if you're not doing big returns, you're doing something wrong, which just isn't the case.
No, not at all. Not at all. Not at all.
Yeah, Palantir definitely worries me, but I don't think that this news was the reason that it should go down. I think it should go down for other reasons, not on a maybe or maybe not thing.
I think that's a very fair take, which is that you think Palantir is expensive, but this headline was a stupid headline to take it down.
Yeah, I wouldn't be surprised if it gets bought up tomorrow.
Me either.
I think people will realize that this was a nothing burger headline, I think.
Yeah.
But are you seeing
one of my friends was in it. He rolled his covered calls on Palantir. He texted me today at 3:30. And then at 3:45, the freaking Pentagon news comes out. He could have saved a lot of money just by waiting, and it sucked. He was just like, "Damn it! Why is it?" He was like, "Why is it going down? I just rolled." And he wasn't mad it was going down. He was mad he rolled right before it was going. For those that don't know, when you roll a contract, when the stock is higher, you have to pay a higher premium. When it goes down, your premium is lower, right?
I mean, look, bring up a chart because you're on whatever you're using. Bring up a chart of Meta. Bring up a chart of Amazon. Bring up a chart of Tesla or NVIDIA. Companies that we can all agree are some of the best companies in the market and have generated some of the most returns. They've all had drawdowns.
Yeah, of course.
Even NVIDIA, and I'm pretty hard judge on valuation. NVIDIA had a blowout quarter last quarter, and it is consolidated. It hasn't done anything over the past quarter. And this is a company I think should have been up quite a bit because that was a blowout quarter. And it set the stage for another blowout quarter. I mean, I don't know. No stock has ever gone up in a straight line the way Palantir has and sustained that indefinitely. I think a rude awakening is coming to HIMS. I think a rude awakening is coming to Palantir and some other companies. So we'll see.
Yeah, and again, I think you're being fair about it, which is that rude awakening doesn't have to come, but it could, and that's why people
can keep going up. But I think it's more likely that these stocks are going to cool off for a little bit.
Yeah. I mean, the thing that gives me a lot of comfort about this is retail's been on this journey for so long together that people's averages are I mean, dude, at the meetup, I don't know if I told you, I met a lady who had 60,000 shares with an average of 10. I met a guy who had 70,000 shares, average of 19. I mean, even a 30-40% drawdown is not going to affect most people's, it'll suck, but
once again, and that's just another reason, that's not nothing. That's a big position. And guess what? These people aren't adding at 60, 70, 80.
That is fair.
You know, that's the other thing, that so many people got this right. And it's almost like, man, who's left to buy?
Yeah, and I think the toots loaded up as well. So any new toots that are chasing. I mean, this is what Arnie said today. Arnie had a great response to someone. Someone said retail has been the reason for why Palantir is running. And Arnie said, actually, no.
I don't believe that.
Yeah, let me show you his response. It was really good. He said, retail investors bought the dip back in 2022. Smart investors are buying the top. Or institutional investors are buying the top, right? So his argument is that the smart money's chasing because dumb money bought the dip.
Yeah, I think he's right on that. I don't think it's retail right now. Maybe a little retail. I think it's more institutions. I think the fact that Palantir is becoming normalized and the stigma of it not being a black box anymore is making people feel more comfortable. And they're probably taking the approach of, okay, I'm going to buy it. If it keeps going up, great. And if not, I'll wait till 50 and I'll just dollar cost average my way down. It'll be like a BABA situation, like I got caught in.
Yeah.
I started buying BABA around 200 and rode it all the way down, dollar cost average when it was under 100, and I'm up on my position. I mean, it took 2 years or 3 years, but I'm up at this point. But once again, BABA, if you trust the numbers are incredible.
Yeah. All right, Steve.
So
thank you.
What happened with Grab? Is this something I should be buying?
I mean, look, I think the quarter was good. They are absolutely sandbagging. I mean, they're blaming holidays for their guidance being lower, which to me is BS. They are sandbagging their adjusted EBITDA. The street wanted 65% growth. They're coming in at 50%. They're net income profitable again. They bought back their shares. Financial services growing above 40%. Like, I think it was a phenomenal quarter, but it was a good quarter. It was not phenomenal. And that's why the stock's down 10%. So I wouldn't.
Rumor that people are trying to say that Dorsey is Satoshi, whatever his name is, from Bitcoin.
Yeah, that's stupid. That's really stupid.
I think it's hilarious.
It's ridiculous. No, like
hilarious.
Dude, I think people are so bored of Bitcoin. They're trying to come up with any reason because Bitcoin's been boring for a long time. So
yeah, and it's Bitcoin. Who cares?
XRP pumped a little bit today, though.
Because XRP actually has a chance at actually doing something meaningful, whereas Bitcoin is like freaking tulips.
Well, it's getting a bit boring, and I think people are not caring as much. But yeah, in terms of Grab, I would wait to buy the dip. I want to see how it plays out tomorrow. I wouldn't be surprised if it goes back to $5 tomorrow. I wouldn't be surprised if it hits 450. So we're gonna see how the institutions treat it tomorrow.
Yeah, I hate the fact that I'm like pulling for Dorsey to do something good because I don't know. It's Dorsey, but I need him to do something good tomorrow.
Yeah, I mean, this is why I just never invested in Block. I don't believe in Dorsey. It's the only. I still think the company should do well. I just don't think.
I think the company is going to do well. I really do. I just, he scares me a little bit.
I saw a podcast with him recently, and I was like, I don't think this guy has his head on straight in certain areas. I was like, I legit think he's just like not smart about certain topics. Especially
I think he's got some ideologies. I mean, the guy's a super smart guy in general. So I think he can build. He's definitely a good builder, but
dude, he's smart. But here's my bear case on Dorsey. Outside of him paying Jay-Z $500 million to buy his stupid music app, yeah, this is the guy Dorsey who is so anti-censorship. He is so free speech, yada yada, decentralized, blah blah. For 15 years, he's running the most important town hall that's public on the internet that's engaging in censorship. And then Elon buys it, and now he's criticizing Twitter and saying go to Blue Sky because on this is the part that really pissed me off. Blue Sky, he's like, oh well, you can customize your own algorithm. I'm like, what type of fucking idiot? What do you say? Like, you think Blue Sky's customization of your algorithm, which is basically a filtration mechanism on do you like sports or technology, whatever, is better than what Elon did, which is not perfect, but it's way more free in terms of just speech and what you can say. You don't have to call someone by their pronouns and get banned than what was under his leadership. And that type of paradox and his cockiness over thinking that his years in Twitter were good leadership, to me, is very scary about how he thinks about the world in general.
All I know is that when I look at their forward estimates, Block looks very undervalued, and I'm very interested to see how they finish the year and what their 2025 guidance is. Because I think, just like PayPal. PayPal is another one that people hate, and I'm not in it anymore. I have no stake in PayPal, so it doesn't benefit me saying this. I have considered buying back in because this is unjustified what happened to them after that quarter. People are getting mad over their guidance. This is a company that's an 80 billion market cap or so, and they're generating 6 billion free cash flow. And they're buying back shares hand over fist, and they're going to buy back another 6 billion, and they have more cash on the balance sheet than debt. And people are mad. It's crazy.
I agree. Last question, Stephen, then we got to go, but everyone's asking for it. SMCI, what do you think is going on here?
I mean, I was in meetings all afternoon, and I snuck a peek at my phone and saw it was at 65, and I was like, damn. I couldn't believe it. Saw that it's around 60 or 58 now or something like that, but yeah, I mean, it doesn't suck. Look, I think it's going to 75 or 80 next week if they actually file their 10K, if they get a clean bill of health, and if NVIDIA blows the quarter out of the water.
Are you at all worried that the 10K will be inconsistent with what management has said, and that even if they file it, there could be some issues?
Yeah, I mean, it's definitely a risk. I mean, how much can you really trust management at this point? We're going to find out within the next week and a half.
Yeah.
Like people, you can sell right now and make a pretty penny.
But you're not. But why are you taking zero? Why aren't you even taking your initial out? Like, why are you? It's not really like you.
Because for what?
To make money?
For what?
Like,
look, as long as I break even on it, I don't care.
This is like an ego thing for you now, huh?
No, it's not an ego thing. This is I'm either going to be really right or...
That is literally the definition of ego. You want to be right about this, which is okay.
No, I'm either going to be really right or I'm not going to get hurt. And I will plan accordingly to make sure that I don't lose money on this. But this could be a springboard next week. And I went into this. There's a reason I bought naked call options for the 28th. I went into this full well knowing that this is either boom or bust. And it's really feeling like it's going to be a boom. Otherwise, why would I put call options on the 28th? And I strategically did it because NVIDIA reported on the 26th, which is Wednesday. So you had 2 more days.
No. But that's not answering my point. Is you got the pump. You got a double already. How are you not?
Isn't the pump. This isn't the pump.
See, this is ego. You think it's going to pump even harder. This isn't it's a little frothy to me, Steve. I'm just saying. Like
it's still selling for under 20 times earnings with incredible growth.
I'm not saying the valuation. No, I'm not saying the valuation's frothy. I'm saying the trade.
Like 14 or 15% short. This has all the metrics to blow a gasket next week.
But it did. It's from 25 to 60.
No,
It did.
This was the shrimp cocktail. This wasn't the fillet. We want the fillet. Right. And I know that that's a horrible way to look at it, but if the numbers are right, this stock is not expensive here. So is this something that I would want to own because I think it's undervalued? At this point, yes. Still.
I get it. I'm just saying, if it was a trade from the beginning and the trade kind of worked out already, like your calls must be up multi-100% at this point,
I mean, I didn't book today, but I mean, the other day they were up like 360% or something like that.
Yeah, I'm like that, but that's like, this is what I'm saying. No one turns down 300% unless they want to be right. And it's okay to have an ego, but this is definitely ego.
No, listen, I think that there's more juice to squeeze out of this. And I think that this is a really good setup. If this was a company that did this and it pushed the valuation to a point where I thought it was overvalued, I would get out. But I mean, look at the valuation here. If numbers are correct, this thing is still so undervalued. I may not even sell my shares next week if it pumps, depending on what the valuation goes to, because of how much growth is on the horizon. And depending on what Jensen says on Wednesday.
Yeah.
I don't think that people really grasp how crazy this AI spend is going to be. I think it's going to be crazier than what we're putting together here because people don't look at Oracle. I don't know why people don't read Oracle's earnings calls. I missed it. I just found it coming through a couple weeks ago. In Q2 earnings call, they straight up said, this is 6 months before the press conference with Sam Altman and Trump, they said they were going to spend $100 billion over the next 5 or 6 years on data centers for AI. And you put that together with $320 billion from Amazon, Microsoft, and Google now for this year, and Microsoft's already halfway done, and they're going to have to come up with another capital allocation plan in the summer because their fiscal year ends June 30, and Amazon's halfway through their $100 billion plus plan. Microsoft's going to have to come over the top to compete because they can't take the foot off the gas when Amazon is still pumping the gas. So this could be a really big spend next year too.
Yeah.
And there's no competition.
All right, cool stuff. I will. I'll talk to you tomorrow. And what earnings do we have tomorrow? I think we have some important ones.
You got Alibaba, you got Block.
Tomorrow's Thursday, dude. It's already Thursday. We have Baba, Walmart, Unity. Oh, Block's tomorrow.
Block's tomorrow, Baba's tomorrow.
Oh, Rivian, Celsius, Nubank. Wow, we got a lot of them. Mercado Libre, Coca-Cola, Dropbox. Got some big names, yeah. Yeah.
Dude, there's some companies that we should have really been in, that we weren't in, that we should have been in.
Yeah.
How did we not stay? How did I let those shares on the board and make it called away? They're 116 today.
Yeah. I mean, cybersecurity in general is definitely catching a bid. All right, Steve. I got to get out of here. Good stuff.
All right. Have fun.
Yeah. Have a good one. I'll talk to you later.
Later.
All right, guys. I'm out. I'll be live tomorrow on the market open. Again, overnight, we do have Palantir, Hood, SMCI, a bunch of names that are getting a little hit. I guess in general, a bit of volatility from some of the market headlines around tariffs, Trump with Ukraine. He was saying a bunch of stuff about Zelensky today and Putin. And then you had the Pentagon headline that took Palantir right here, 105.76. So that is a new low on Palantir in the past month. It was at 105.90 a couple hours ago, now 105.75. Pre-market's going to be very important to see if people buy the dip or if this one continues to sell off a bit. All right, that is it. Thank you, everybody. Again, I wish Grab was up 10%. It is not. I can't control the stock. I can control my expectations, and I think everyone can control their expectations versus the outcomes that happen. And it is what it is. If you're a long-term investor, I think this quarter was great, and I think over time it'll get there, but it's not happening overnight, and that's okay. And quite frankly, a lot of people that expected it to happen overnight, they're going to move on from this and go to something else that they think can pump overnight, which is okay. It is what it is. All right. Thank you, everybody. See you guys tomorrow on the market open. I did a clipped daily Palantir video as well for those that want to check out me and Sam talking about the Palantir decline from the market close. So you guys can check that out. But we'll have a lot more analysis of it tomorrow, and we'll go deeper from there. All right. I'm going to pop some Tylenol and go to sleep. Bye, everyone. Have a good one. Good night.